Hello and welcome, or are we live? Are we not live? Still says preview. Now we are live, okay. So hello and welcome to another stream with me, Christian Rauchenwald, on this beautiful Friday, a little bit later than usual. I hope the stream works. I also hope the audio is okay and not too loud. We had some internet issues, so we've been without internet for the last 6 hours or 7 hours almost. And so I actually feared that maybe we wouldn't have a stream at all. Now, yeah, I'm still trying to open everything up that I need. I might not be as attentive during the first hour or so of the stream because due to the lack of internet, I also didn't get anything else done, which means I still have to do some other things on the side. Yeah, I also need to start the API. It's been a, yeah, like how, so I can already open that. It's been actually like let's push that button and push it again. So now it should, yeah, look like this. So it's been actually a horrible week for my portfolio, although today seems to be a great day for my portfolio because like in May so far I'm down 7%, which is a new negative record in terms of negative performance. But it looks like today we are actually recovering parts of that the way it looks. Let's see how much we will recover at the end of the day. I still need to quickly turn on the whatever it's called from Interactive Broker so that Motive Wave can connect there, and then we can more or less start. Now, one thing you might have noticed already during the week is that we had another drop, and as a result, what we discussed on Monday, where we had George, I think was it, that mentioned it, that provided his alternative labeling and suggested that we might actually be looking at a bigger triangle that goes till basically May 4th, so till this week. And it turned out that that's the case. So our endless correction that has been torturing us since March 27 roughly, or actually earlier because we thought it was over at March 25th, actually, yeah, like plays out more like this, is a longer triangle. The good news, I mean, the difference is like I thought it would be A, B, C, D, E. I think that's how we had it. So we thought it ended here. Kind of like in retro perspective, now that we have the new candles on the chart, it kind of like makes sense to see that that's not the case. Let's hide that Fibonacci retracement. Can I do that also visibility? No, okay. And yeah, and the good news, however, is it's hardly possible that this now is wrong, because there's no way, if we would have here like A, B, C, A, B, C. Yeah, there's like in this triangle, there's no way that this triangle turns any longer. So I think we finally got it. As a result, we actually just had the start of our wave 5, which we actually originally assumed was, I think, here, where we actually have wave C. And we saw already wave 1. If we look closer, wave 1 of the new impulse, which will then be 1, 2, 3, 4, 5. Yeah, like I labeled something yesterday, I think. Yeah, yesterday, so that we still will see a drop. Apparently the drop happened till here, and surprise, surprise, it's exactly the 61.8 Fibonacci retracement, and which means then technically from here we have the next 1, 2, 3. So this is 1, 2, and we're currently then here in wave 3. So technically today we would actually expect to go up. Now I said I still need to start up some, where is it now? Not here, not here. Did I not open it already? So start up the Interactive Broker software and log in. So we have data, and then we'll take it from there. Hi, Osama. And hi, Josh. Great to have you guys here. Osama mentions maybe a double free. No, and the nice answer why no is actually that even in a double or triple free corrective pattern, a triangle would always be the last. So you don't have any corrective pattern that starts with a triangle unless it's a triangle on its own. And as a result, we are pretty much out of like alternative options here that we, yeah, like, I mean, George mentioned it in the Monday stream that it could be, and I said like, I'm not sure, we'll see it. And when we ended the stream on Monday, I said we have three options. Either my labeling was right, we would go up, which didn't turn out like this. George's labeling is right, and we fall a little bit further. His lowest area, I think, was, or wave basis predicted the 147 or 43 to 153 area. Turned out we didn't go that far. We went to 155, and then somebody else pointed out that based on something else, I don't remember, like that we might fall, or that we might fall to 158 and turn around from there. So either way, my original labeling was wrong. The assumption that the triangle already ended was wrong, and it actually only ended recently. Not here, now we're looking too close again. So here, and with that we would have wave 1, 2. So that's the reddish one, and there also we can see that I mean, it went slightly below the 61.8 retracement, but still nicely. And then here basically, we're already in wave 3, in this reddish wave 3, so sorry for that. And within this reddish wave 3, we now have wave 1 and 2. And again, as shown just a minute earlier, we pretty much hit the 61.8 retracement on the spot. So this is now wave 3 of this bluish pattern, or not of this bluish, but of this wave 3. So basically we can draw our base channel here, and we would actually expect to soon see a breakout out of this channel, which would confirm that we have this wave 3 movement, unless, always that unless, technically if this here turns into some kind of zigzag, then this pattern here, this wave 2, could be not finished yet, then we see sideways movement, yeah, and basically a longer wave 1, 2 before we go up. But what we're still waiting for is a breakout from the channel that would confirm, okay, we are in this wave 3, so not the red wave 3, but the wave 3 that's part of it. And which likely will not happen till here, because that would be like, if we manage 3, 4, 5, we would really need to be fast moving, so that wave 3 will happen a little later. And yeah, so that's where we stand now, connecting to get new data. And as said, so as said, like, I might not be super responsive for the first hour or so of the stream, because I have to catch up with some other things that I wasn't able to do because our internet was down. So, okay, there it says mining off. Okay, turn it on again. And yeah, so hey Christian, what do you think about yesterday's hearing and the very low volume plus the 5 minute the market was down 2 days ago? I didn't notice any of that, to be honest, like neither hearing nor market down nor anything else. I've had a very, very busy week so far. And yeah, like literally yesterday spent a few minutes to relabel according to the new end of the triangle. So basically till this point here, or actually till this point, and where it already said, okay, we might go lower to finish that zigzag pattern, which actually now, since we have more candles, oops, wrong button, will look slightly different. So might be tricky. We might really look at a longer corrective pattern here, because technically it could be that the first ABC ended somewhere here, and that this is another ABC move, which would then be W, X, and now we would see some other corrective pattern. Yeah, it's not really a nice ABC to get down here, so. And with this, we actually fall below the 61.8 retracement. So which means, so technically, if this is ABC, technically we know that very often we can label an impulse also like in like 3 waves, A, B, C, and although it just looks nice like an impulse, yeah, like in terms of 1, 2, and I don't know about this retracement here, but it's like, yeah, a little bit below 61.8, then in terms of channels, I didn't verify that, but if we have channels, okay, in channels it doesn't look nice, yeah. So technically it's possible that we actually are looking at this. Yeah, not maybe like ABC, maybe like AB, yeah, I don't know where you're going now, you stupid labeling. So then that would be gone, and which means then technically you need to move that C real quick and then move that 2. So gotta love that program sometimes. So technically it's possible that we're still, oh yeah, that auto labeling. Yeah, somehow. So that this still is this second wave here, and that turns into a double free or triple free. For that we would have zigzag, zigzag. Now this could be another zigzag, or it could be the start of another triangle pattern or whatnot. So, but if that were the case, then we would still have our base channel from this point 1 and that then unorthodox point 2, or that would then likely be the orthodox point 2 for now. So we would still wait for a breakout or expect a breakout to 170. We wouldn't expect it to go lower than where we are currently at, and yeah, so that's where we stand. And we need more volume for that breakthrough though, yeah. Yeah, definitely volume is needed. And yeah, so just have to wait and see a little. And yeah, in terms of checking how we're doing, so I said like this month so far, like, yeah, like going horribly. So as of today, before market open, -7% this month so far. And yeah, like we're gonna likely recover a little bit of it today. As we can see, who's the biggest winner so far? Tilray. Yeah. I really at some point, like, I mean, I also yesterday looked at Tilray. There technically we can go as low as 1160 before the labeling becomes invalid. And yeah, like there with the new low, we would have a new 0.4. Still doesn't look super nice up in terms of distance. And we don't, oh no, that hotkey. So A, B, C, yeah, it's not a, it was nicer here in terms of the angle of the C wave, yeah, but it is what it is. So that's what we are currently looking at here. And we're pretty much, we still, oh yeah, no, the destination channel would change if this would be 0.4, and the profit target would then change and would likely be a little lower. So like, I don't know, 100 something in, I don't know when in the future. So I'm still keeping my Tilray position, and depending on how it develops, like probably if we would touch 1160, that would be the point where I would, yeah, take the loss. Because then that label, I mean, yeah, I mean, then that labeling could still turn into a leading diagonal. It's kind of like challenging. The flexibility of Elliott wave theory is like on one hand super great, and on the other hand, like what breaks us the neck half the time. Tesla is also going up slightly right now today. I had to relabel. For some reason, I closed the first tab, and it kind of like, for pretty much everything, my labeling is gone. Yeah, don't know how I could have prevented that, but I'm sure I'm gonna figure that out or avoid that the next time. And yeah, so kind of like that's where we stand. Now today is the 7th, so I already did that. So much stuff to do, and I need to. Okay, so I'm gonna minimize that real quick and okay, there's nothing, and then can check that. How was your week, by the way? Like, so don't hold back. Did anybody buy more GameStop, or what did you do this week? So that's done, okay. That's done. Okay, so we only have those two left. Okay, okay. clean here. And yeah, like then we're gonna look, so like I really, as said, I have to finish up or catch up with a few things that got left behind. And then we're gonna take a look at the other stuff that was mentioned that I somehow missed this week. So, okay, did that. And okay, update that. It's like without internet, I'm next to useless and not much I can do. And then when it's back, it's kind of like everything suddenly, or I have then to catch up with everything, which is, and where's that there? Today's the 7th, so 21, 31, so let's say in a month. Okay, search traffic, oh yeah, open that, bring that back, a million things, so yeah, finally got to double-digit shares. Other than that, pretty boring. Ethereum has been pretty good to me though. I'll wait for the best moment to sell for some more GameStop. Yeah, like I don't, as mentioned, I don't touch my crypto at all. It's like I just keep collecting, and then yeah, like even if some of the coins that I'm collecting may turn out worthless or so, but if just one of the coins or projects in progress turns out to become a real cryptocurrency and in 5 years has a value of, I don't know, even close to $1 or so, it will be a fortune on my end. So, but yeah, and for my Bitcoin holdings or so that slowly grow by like $100 to $150 per month, I also just hold them. And yeah, I thought about if I should specifically mine Ethereum because I also like it, but it would just be like a little bit more effort on my end, and in the end then, yeah, like I consider like if you hold Bitcoin or Ethereum, it kind of like doesn't take, or it's not such a huge difference. Yeah, so I personally, yeah, like I personally wouldn't sell my crypto holdings, but I mean, it's really with GameStop is a tricky situation. I mean, I said like already when we started the streams and even before that, based on the posts that there are on Reddit, that there is just so many different aspects or due diligence or however you want to call it, that all point towards GameStop is going up. I mean, even without considering a potential short squeeze. Okay, oops, wrong screen. And so, yeah, it's like really hard to hold back. So I already, oh no, I didn't have that, so cool, 48. And now the next one I need would be 64. So that, and yeah. It's a bit tricky with this corrective pattern here, because if this here is a zigzag of some kind, yeah, and we actually look at a double free corrective pattern here, then this could be another flat or could turn into a triangle, so like A, B, C, D, E, and depending on the volume, it's actually probably likely that we might see another triangle. So yeah, just have to wait and see as always. But yeah, overall everything points upwards. And so it's tricky to not just dump everything into GameStop, yeah, because no matter how sure we are and how many, my wife's giving me like the I see what you're doing look, yeah, and no matter how sure we are about that things might explode or will explode, or how sure we think we are, we already saw in January that there are always some things that could happen that we cannot or could not foresee, like buying restrictions, yeah. Another thing that we maybe could not or cannot foresee would be government interference or some stuff like that. So it's really, really tricky, and that's why I personally, I mean, the majority of our funds, like more than 50% of our funds is in GameStop, but yeah, like I definitely wouldn't put all of it in there personally. Not because I don't believe in it, but because I rather, like, even if the stock would only go to 1,000 per share, and only in quotes, yeah, then it would still be like north of 80,000 profit for us or so. And, or actually, by now we have like, I think 90 shares, so 85,000 profit for us before taxes, which would still be more than a great return, and nothing to be said about. Yeah, so 50 already had that, okay. And yeah, so that's why I personally don't dump everything into GameStop, and because I still want to stay married, so yeah, my wife is chuckling at that, so. That I also looked at yesterday at Fiverr, and I figured that it's still in the downward trend, but apparently we might already have this wave 3 here and might now be in the progress of whatever 1, 2, so likely 1, 2, the wrong button, to hit that line here or the median of it and then bounce again to, so that would then be wave 4, and then bounce again downwards to finish that corrective pattern. 14, also already have that one. Where's my mouse? There. And yeah. Hi Ali, great to have you here. And hi, I already said hi to David, yeah, so how long have you been married? We've been married now for just 1.5 years, yeah. So it's like I met Irina in 2017, and we are together since pretty much early 2018, and we got married in end of 2018, end of 2019. When I was already living here, yeah. Yeah, so got married in 2019, so. And yeah, like gonna read the next message in a second. Just playing with Phonium. As said, my daily tasks that I have to catch up with that I couldn't do without internet for the last 6 hours. Or sweetie, can you check for like ordering second internet access today? Yeah, I mean to place the order or to do whatever, so that finally has an end. It's like on one hand it's great, you know, like, so we have like here 1 gigabit synchrone connection, so up speed and down speed 1 gigabit, so 1000 megabits per second, and yeah, for like $12 per month or so, which is ridiculous compared to any other country. However, on the other hand, since we moved to Kiev in December, this is I think today the 4th time that we had issues, and one time it was like pretty much the entire night, which didn't really matter because we were anyway then sleeping. And then last week I think it was for like half an hour during the day, and today it was like for 6 hours or so. And yeah, since we rely on the internet for our work and for everything, it's not really acceptable, so we're just gonna get a second access installed so that if our current one doesn't work, although the other providers offer a little bit slower bandwidth. No, I'm not playing slots, but you hear my mouse clicking, sorry for that. Cannot share that with you because it's on the other screen, or maybe, yeah, I can actually. That might not look nice because it's kind of like from the connection over, so I am doing my daily phonium tasks, which is playing tic-tac-toe or whatever. No, it's not tic-tac-toe, it's like rock, paper, scissors, and spinning a wheel. But I can reduce the volume a little bit if it's too much, so let's say minus 10 or so, or minus 15. So hopefully the mouse clicks are not killing you. And yeah, oh, now you have a loop, yeah, sorry for that. So inception, and yeah, let's just gonna bring this back over here and have the chart over there. So for those of you who don't know, Phonium is like a crypto or a Tron-based token, and you pretty much can earn it by just using their apps, yeah. And so it's not worth super much. I don't know the current value, but it's like, you know, less than a cent or so per coin. But you basically, with like, yeah, 10 minutes per day or so, you can earn like 400, 500 Phonium. And yeah, like that's one of the things that I mentioned, like it's the cryptocurrencies that I think have potential in the future, might have potential, might turn out that it always stays as worthless as it is right now, might turn out that in someday your mic went down and audio went up, can't hear, we can barely hear you, but hearing clear the music, there is no music, how can you hear music? Yeah, okay, like, so we're gonna, oh, there is music, sorry for that, yeah. Okay. So let's try this again. Yeah, you all are so great. Yeah. Where does the music come from?
From the game, no?
Oh, it might really be from the game. Yeah. Oh, sorry for that. Yeah, I'm really sorry for that. I never hear the audio because I don't have any audio plugged in on that computer. Yeah. So. Oh yeah. Sorry. So now it should be fine. You still should suffer through the mouse click noise for a little bit, but I think we did it. Yeah. So, thank you all for pointing it out. Yeah. But yeah, so Phonium is a mobile, or like a mobile cryptocurrency based on Tron, and with like a few of their apps, you can basically just by spending 10 minutes per day earn a couple hundred Phonium, which is like worth a few cents. But my assumption is, you know, like it's kind of like in my list of daily tasks anyway, because it's like one of the things that I cover on my main YouTube channel, and if it turns out to be valuable at some point, it's going to be a huge success, or a huge nice thing for me, because I'm currently, so I started with Phonium I think a month ago, and because like of my main YouTube channel, which has a lot of traction in that area, and the referral bonus that one gets and so on, I currently hold 630,000 Phonium tokens. So as said, if in 5 years for some reason the token manages to be worth $1, it would be quite incredible for us. And if not, I basically lost like a few minutes of my time per day. However, I also have to consider that I, anyway, from our main YouTube channel, make money based on the videos that I make about Phonium and other projects. So technically I didn't lose anything. I already got paid from YouTube, and if the coins turn out to achieve a nice value in the future, it's just like a potentially really big bonus on top of that. Yeah. So yeah. So, and yeah, again, sorry for the audio stuff again. Yeah. So yeah, David mentioned if government would interfere, that will mess with trust in U.S. market, and this never happened before. Like to government to put a limit, they generate new laws after the fact. As far, yes, I also don't expect it. I'm just saying, like, we don't know what else is possible. Yeah, like. I also expect to get paid for the close to 100 shares that we have, but I'm just saying, like, never, I don't know, like in German we have a saying, you shouldn't praise the day before the night, yeah, and or pride comes before the fall would be something similar. So I mean, not super similar, but you know, like you shouldn't celebrate before you kind of like hold your attendees in your bank account, not in your trading account, so you successfully withdrew them. And until then, a lot of things could happen. Like I don't expect any negative GameStop news or that the company actually goes south for some reason, yeah. But like nobody knows what else our opponents have in store or could come up with, or how many laws they are willing to break and so on, yeah. So that's one of the reasons why, yeah, like I don't want to have everything invested in GameStop. So it's like maybe they're a little bit burnt in terms of, I mean, obviously there's never been a situation like GameStop, but throughout my life when I was financially, let's say, illiterate or uneducated, yeah, I have a referral code. I can share it with you in a second. But throughout my life, yeah, when I was like, yeah, like didn't know, anything about finance or not a lot, yeah, like I lost or busted a couple of trading accounts. Obviously not with huge amounts of money, but back then with amounts of money that made a difference to me. And yeah, so it's also, so that would be the Phonium referral code. And actually the best app, so I mean, Crypto Treasures would be one of them. Now I closed it by accident, or yeah, of course. But actually the fastest app, if you really want to just spend the minimum amount of time to earn Phonium, there's no copy button, screw that, would actually be Crypto Cards. And I'm gonna share that as well. So Crypto Cards would be AVSZSRTU, AVSZSRTU, yeah. And I'm gonna look for Crypto Treasures real quick. And because they're in Crypto Cards, you can once a day spin a wheel that can win you 250 Phonium. Then there's a mini game where it takes 50 seconds to play and you can win 100 to 200 Phonium. And yeah, that's pretty much the easiest way to earn Phonium. So like if you just use the Crypto Cards app, if you really want to keep the time, these time spent to a minimum, it's like then less than 2 minutes per day, and you earn somewhere or potentially up to 450 Phonium in a day. Plus in the main app, so the main Phonium app, there you have, why is the app not launching? Let's try that again. In the main Phonium app, you have your weekly mining. So there's once per week you push a button and you earn 200, 300 Phonium per week just for doing that. Yeah. So it's more about developing a habit. And yeah, like the last one would be Crypto Treasures, invite. Yeah, also no copy button. Okay, also gonna have to type that Crypto Treasure 6JQ3N. And so those apps are more about developing the habit that you actually use them and that you kind of like don't give up. And then it's like really just two cases, like either the token develops a value and establishes itself on the market and you profit nicely from it, or it doesn't and you lost a few minutes of your time. Yeah. Unlike other projects that are out there, like for example Pi Network, B Network, and so on, Phonium, however, is already a real cryptocurrency token, and you can trade it on the Probit exchange. So while you have to jump through a few hoops because it's Tron-based, and so you need to basically, yeah, like if you haven't used the Tron-based token before, you have to kind of like learn that for the first time, how to transfer things. But technically, you could already turn it into money, whereas other projects out there, again, Pi Network, B Network, and so on, are not real cryptocurrencies yet. So yeah, so, and yeah, so like catching up. So hi Jeff, hi Ludi, I think I did not miss anybody up there. Hi Emission Nocturnal, and yeah, so thanks for all the answers and the good content again. Yeah, Christopher, no Christopher here, it's Christian, but okay. And yeah, so blah blah blah. And the main Phonium app is called Cloud Earning. So if you just go to phonium.io or phonium.com, I'm not 100% sure right now, there you have them in a list. So the Cloud Earning app is the one where you push a button once per week and you get Phonium credited there. And the Crypto Treasures app, that's also one of the differences. The Crypto Treasures app is actually linked to Cloud Earning, so the balance that you have in Crypto Treasures matches your balance in the Cloud Earning app, whereas the Crypto Cards app has a separate balance, so at some point you would need to, if you want to combine everything, you would need to transfer that balance manually over. And yeah, so, but again, like Phonium really like still might turn out to have no value at all at some point, so like completely fail as a project, but yeah, it's kind of like, I don't know, it's a little bit, I don't like to make the comparison, but it's a little bit like if you think about back when people started mining Bitcoin and some people were, oh, it's the new cryptocurrency, it's going to change everything and I can mine it on my computer. And other people were like, oh, dude, look at this, it's not even worth 1 cent and whatnot and so on. So obviously Bitcoin was the first and it's a very different situation. That's why I'm saying it's a little bit like, it's a new cryptocurrency that might establish itself or might fail. And yeah, like with just a few clicks or using your phone a little bit, then you kind of like get that cryptocurrency and either it turns out to have a value in the future and you maybe have a really decent return for the time invested, or it turns out to be completely worthless or the project fails or whatever and you waste a little bit of your time. Now, Jeff asks if I have started mining helium. Now we're still waiting for our hotspot. Like we ordered one from CalConnect or CalChip Connected or whatever they're called in January. And there the shipping date is actually, by now it was changed to early May, so it should be shipped anytime now. And then we ordered another 2 from Libra, but those we ordered later, end of March, and they are basically shipping date like, I think July or so. So, yeah, so. But that's, but that's definitely something that I'm looking forward to because helium is obviously, in my opinion, a no-brainer. Either invest $400 by your own hotspot, or apply it. Providers like Emrit to get a free one, but they keep 80% of the profit, and then just install it in your home, and it kind of like earns you cryptocurrency with almost no electricity cost since it's basically just a Raspberry Pi. And yeah, but so we are still waiting for our hotspot to show up, and like we'll then take it from there. Now I did that, and somewhere is still that open. Okay, so did all of that. What's left? Still have to deal with my comments, and quickly gonna deal with that. Yeah, for those of you that just joined, I'm usually more attentive to the chart, but as mentioned, I didn't have internet for 6 hours today, and so I'm kind of like catching up with a lot of other things that I should have done before the stream. And yeah, so at some point I actually wondered if I should just go live later, but then I figured I might just go live, and if something super fast moving happens, we're gonna definitely focus on that. But other than that, I can just do the other things on the side real quick. What's that country? You'll just have to suffer through that zooming motion, unfortunately, whenever I switch between apps on the other screens. Chile, yep. Okay, that's fine. So hide, delete, download. In case you guys are, Ali, definitely. So like Phonium is one of the things with a possible return of investment for like very little time. But there are other apps that actually, I mean, again, that are not real cryptocurrencies yet, but require even less time. So if you check out this channel, then you see like featured channels or something where my main channel is mentioned, and you can, if you are interested in that stuff, check out some of my latest videos. Like there are projects like Pi Network, which currently is in a testnet phase, so and should reach their mainnet by the end of the year. And there you pretty much get their hopefully future crypto for just pushing a button once per day. Yeah? And you don't earn a lot unless you invite a lot of people, But even if you just do it yourself, you get a few of those coins with literally opening an app, pushing a button, so like 5 to 10 seconds effort per day. And either that cryptocurrency turns out to have a value in the future and actually becomes a real cryptocurrency, and then whatever value it has, you can just hold it long term and hope that in 5 or 10 years it reaches $1 or $10 or maybe more per coin, or the project fails. And yeah, like you basically, I don't consider, honestly, like I don't consider opening an app once per day to push a button actually a waste of time, considering how much time I personally and most other people anyway spent on their phone. I don't know, scrolling endlessly through Reddit or Facebook or something else. So, but yeah, so, and there are a bunch of projects like that. There are also other projects like, 1 second, Chile. This is a typo. And so there are also other projects like, for example, Geocache, which is interesting, which is another mobile app that you just have to install on your phone and share your location data. And it kind of like takes your location data and some device information, like what kind of apps you have installed and so on, and then yeah, like anonymizes it and doesn't share it, but it gets or combined into a block. And basically you're selling some of your data on purpose, because companies can then buy aggregated sets of data. So for example, I don't know, certain movement behaviors or average movement behaviors, not of you as a user specifically, but of groups of people in a certain area and so on. And yeah, and for sharing your data, you earn something called Geo, which is already a real token or coin. I think currently it's a token with a value of 70 cents per token. We are not moving much because we work in the home office, and I personally don't have to leave the house that often. So I personally earn around like 0.1 Geo, so like 7 cents per day. So it's not much, but there it's literally just about having the app on your phone. Like you don't even have to open it and push a button or something. As long as it's on your phone and you set the location permission and you move a little bit, which all of us do to some or a little or more extent, you earn that token, yeah. And yeah, and there are a few others as well. So there's like a long list of, many of those projects will likely fail, but some of them, or yeah, as said, if even one of them, yeah, Alpha Network in my opinion is like, I just reviewed it recently, is actually, I think it's a scam, but it falls in the category that it's like, it has not a lot of, there's no solid proof or evidence right now that would say or suggest it's legit. There are a few things that don't check out fully, but also not enough to say it's definitely a scam. So it falls in the category, yeah, like what do you have to lose? Because it's also an app where you just have to push a button once per day, yeah, and blah blah blah. What do you think about the divorce of Bill and Melinda Gates conspiracy? I honestly don't think about things like that. Like, if they don't work well together anymore, like if it doesn't fit, then it doesn't fit, and then they should get divorced. Like, I'm the last person that looks into why. Yeah, like, I mean, I'm obviously gossiping when it comes to our acquaintances and their relationships, and like pretty much like who I think will stay together and who I think won't. But I think it's like, yeah, like, maybe they just want different things right now. Just because they're both already older doesn't mean that they are now, oh my God, we are at this age, divorce is not an option anymore. Like, if it doesn't work anymore, then it doesn't work anymore. It's like, I think personally, like, there's so much conspiracy about Bill Gates and this and that and so on, and I think all of it is garbage. Like, I think I mean, yeah, like, if you look at the stereotype that most people think they want to become, so like here I drive my Lambo, and especially when it's from a guy's perspective and I have like those barely dressed hot girls in bikinis around me, like what's this guy named, Dan Brazilian or something like that, yeah. Those are not, I don't know, those are not, or that's a different level. When we look at the super rich, like we look at Mark Zuckerberg or Elon Musk or Bill Gates or Warren Buffett and so on, they are all very, very, in my opinion, very, very grounded people. Yes, they might live in big houses that are very expensive, expensive, and they might afford better vacation than the average citizen, and they might not bother. Some of them might even spend some money or some of their money to afford a private jet, yeah, or something like that. But overall, they are all, or they seem to me, very, very grounded, and yeah, like, so kind of like are not just grounded, but they seem, to me personally, it looks like they actually use a lot or a certain amount of their money to actually try to help improve things. So like Bill and Melinda have their Gates Foundation or whatever it's called. So where is that? Sri Lanka, Kote, okay. And yeah, like, and I personally definitely have better things to do than to wonder about like why a couple got divorced or so. Like, it's only if it's within our friends. So like one of my closer friends got a divorce 2 years ago, and there we obviously like knew him and his wife, or still know both of them. And then it's obviously like the question like, okay, why, or did we see it coming or not? But yeah, like I think that's one of the problems in our world anyway, that like people spend so much time. I'm not judging any of you here in the chat. I'm really talking in general, yeah. And when I say something like all the people, I don't mean 100% out of 100 or 100 out of 100 people. I mean like a bigger portion or something, yeah. But many people, or all the people in quotes, are so focused on the life of other people instead of taking care of their own. I mean, there's a reason why it's very common that you would tell somebody, you know, why don't you look into the mirror first, or why don't you take care of your own shit, yeah, and so on. Like, I mean, there's a reason for that. It's because it's human nature to constantly find flaws or issues with what other people are doing, but not really reflecting in what one is doing themselves, yeah, whatever. And a perfect example would be like living in Ukraine and hearing Ukrainian citizens complain about, for example, corruption levels. My wife is laughing. Lack of infrastructure, the bad roads, and so on. But on the other hand, those same people are the ones that are in every situation possible avoiding to pay taxes, and whenever they can, bribe people to get ahead or skip waiting times or something like that, yeah. And I think it's a problem of human nature, like it's, yeah, in general. So it's like, for example, like during the pandemic last year, I think Kim Kardashian went to a private island or so. I saw a tweet, something about it, with 10 of her friends or so. And she tweeted, or it was on Instagram, doesn't really matter. It was something along the lines of, I know that during the current time, this is not possible for most of you. So she phrased it in a way that if there would be no COVID, we all would be able to jump on our private jets and fly to our own island with our best friends, yeah. And people started hating on it and so on, yeah. And maybe with reason, maybe without reason, but like, I don't know, if I'm financially not there where I want to be, then I rather spend my time taking care of getting where I want to be instead of looking at how others spend their time and judging that, yeah. So many speculate about it in combination with GameStop, so I thought I would just ask about it. That's actually an interesting sentence, and I mean, without knowing any context or having, like I said, I've had a really busy week. I didn't notice because somebody earlier mentioned, I think Jeff mentioned, that the market was closed for a few minutes or something like that, yeah. I didn't notice any of that, so okay, so David already jumps in with additional information. Word is that Gates either shorted GameStop, and if he divorces, saves half of money. And another theory is that he has a crap load of money in pension funds, those you can get out without taxes only if divorce. Interesting. Well, I think in both cases that both theories might lack, I don't know, like I think, if I would just take the message from Ludi here, like that many people speculate that it's somehow related to GameStop, my instant response would be like, what a garbage, in quotes, like how can one draw the conclusion? Then with David's additional information to say that the speculation is he shorted GameStop. Honestly, I don't think that that dude manages most of his or any of his portfolio himself. And I also don't think, considering the wealth that he has, like theoretically, that he would bother to invest a significant amount in one company, even if it doesn't matter if it's long or short, especially if it would theoretically offer the risk to wipe out a lot of it. Yeah, and the other aspect there that I see is like, how long does it take to finalize a divorce? So I'm not sure if it's already through. I just saw somewhere one of the articles pop up that they get a divorce. But so how long does it take? And what if it happens before everything is finalized? I don't know if it's finalized. Yeah, he openly admitted he was shorting Tesla. Yeah, okay. Yeah, but the point is, if you have, I don't know, like I don't know how rich he is right now. Let's say 100 billion, maybe a little less, maybe 50 billion. Yeah, maybe if it's 20 billion, like honestly, even if he, I mean, first of all, not all of that money is available cash. Much of it will be shares of companies that he owns and so on. And if then from the money that he actually has in his investment accounts, a fraction of it is shorting a certain stock, yeah, even if it then moves against him, and even if it wipes out his entire trading account or something like that, or investment account, there's still billions of other dollars left. So I don't see that like, oh, let's get a divorce to save some money. I don't know Bill Gates personally, but I don't think he's the guy to do that. He would probably just, I don't know, like deal with it. Yeah, like, I mean, and 002 just got delayed a few weeks. Hi Noah, great to have you. I don't know what you mean by 002. Like, I'm also not familiar with divorces. I'm like married once and yeah, like, and like my wife says forever, I told her the only way out for her is in a box. So till death takes us part. So he openly admitted, yeah, we had that. Yeah. And even if he would have a lot of money in pension funds and he would only get it tax-free if they divorce, yeah. I mean, consider the wealth that guy has, yeah. Like, I mean, honestly, like, what on this planet what on this planet do you think he couldn't just buy if he wanted to? Even if he doesn't have the cash right now, but he has the credit score and the bank balance that probably any bank is happy to give him a loan, even if it would be for, oh, here's 10 million for a private jet or something like that. So, but yeah, like, and that's what it is, Ludi. It's really just my opinion. Like, it's like one of the things that I mentioned over the weeks during the streams often enough that while we have a lot of things that point, for example, towards GameStop is still heavily shorted and we'll see a short squeeze, we also have the official number of the short interest, which would say no. Now we have a lot of official information that would point or would indicate or even prove in quotes that the official short interest is not true, so that the self-reported numbers are of 11 million shares shorted is yeah, like a lie. But still, in terms of like the numbers we have, we don't have like it's 100% certain it will happen or guaranteed. Let's say it like this, based on the official numbers, not based on speculating certain things. Like, I think based on that it could mean that this and so. Yeah, and I think that the same applies here. Like maybe it's really true. Maybe he shorted GameStop. Maybe he shorted it to some extent. But I don't think he manages his portfolio himself. I really think, like, honestly, if you're that rich and you spend time managing your own portfolio, you did something wrong. Like, unless trading is really the one thing you enjoy. But if trading would be the one thing he truly enjoys, then he wouldn't have started a software business. Yeah. So. And yeah. So. I mean, I'm very bullish because of the million things that we have. Like, if we, I mean, we go through it over and over again, yeah, but if we go with like traditional trading methods and we say, okay, we have a big wedge here, or even a bigger one when we look from here, then maybe to here or so, yeah, which would indicate we likely can see, I mean, there's a chance that it goes down theoretically if we have a wedge, but there's also more likely the upside here. Then If we consider the shares in circulation, we have a lot of indication that the stock is still heavily shorted and so on. If we use Elliott wave theory, we have, okay, it will go up from here and so on. So we have a lot of different ways to look at the situation, and all of them point towards, okay, the stock is going to go up and it's going to go up far. Yeah. The short squeeze scenario is obviously the one that would say, okay, we go far beyond $1,000. Elliott wave theory would say, okay, we go to $1,000 for wave 3, drop a little, and then go, I don't know how far. We will see that once we reach that 3 points precisely, or actually the 4 point after that. After that, we might go, according to Elliott wave theory, might technically go to whatever, like 10,000, 20,000, 100,000. It's really, as things develop, things become more clear. But what really helps me is, personally, is the aspect that while I've been wrong countless times with labeling, so like I'm doing the wrong labeling, and the perfect example would really be the last couple of weeks where, like, I don't even know how often by now we relabeled this part here, like where we thought, okay, wave 4 over, we go up, okay, we realized it's a zigzag, we realized it's not a zigzag, it's a triangle that goes till here, we realized it cannot be a triangle that goes till here, and so on, and we thought the triangle ends here, and eventually now on Monday, George pointed out, no, the triangle likely goes till here, and so on. So while I've been wrong with the labeling, which is basically human error, jumping the gun and not considering, is it possible that this is not the end, that the triangle will be longer, or that this and that pattern applies, and so on. Elliott wave theory in the end has been proven accurate enough for me to trust it. So that's why I don't really care that much. I mean, a short squeeze would be great because it means a lot of profit in a little time. But even without that, long-term, great investment in my opinion. And yeah, hi Paul, great to have you here. And good morning to you. Yeah. Hi Pranay, great to have you. Since GameStop is still moving slow, would it be alright if we go over some charts of other stocks? It may not be on eToro, I don't know, but I'm having a hard time charting the recent movement. We actually may, but I might need a little bit of time before we get there. I somehow got sucked into this conversation about Bill Gates, yeah, because I didn't have internet. I mentioned earlier I didn't have internet for 6 hours today, and therefore I'm like still catching up with some work that needs to get done. And yeah, but feel free to share, and as soon as I finish the next small task on my list, we can jump on that, yeah, which would be dealing with whatever is on Discord. Yeah, so like days like this just show me how dependent we are on the internet, yeah. Same here, who cares? And still have support tickets as well. But yeah, we tricky to see if that will Did you watch any of the hearing? No, I didn't watch anything. Like I literally have been working on our business the entire week. And other than yesterday evening where I relabeled a little bit, yeah, didn't get anything trading related done, which is kind of nice because it just shows we're gonna get rid of that. Which is kind of nice because it just shows that I'm super relaxed about where GameStop is going. I mean, I have my alert set up if we would cross certain price levels, so I wouldn't miss the explosion because as mentioned, if or when we have a squeeze, I will obviously go live. And yeah, okay. God. Hi Michael, great to have you here. Okay, we're yeah, trying to catch up. So like, I'm really bad at multitasking in case you guys haven't noticed that already. So just gonna finish this message and I'm gonna like pay a little attention again here. And yeah, somehow I'm gonna manage to stream and finish everything I missed today so far. And okay, caught up with this. Great, good, great. So okay, now let's need to connect there. Now still connected. So okay, so there we have a chart image for something, something. I'm just gonna copy that over on the screen for now. And so hearing, I followed the third hearing, really a lot of soft questions and almost nothing about the fails to deliver and the naked shorting. Okay, AMC, I think we looked at AMC, but then the problem, if I recall it correct, that I see, haha, with AMC is that since IPO, that thing has been going down and yeah, like so. We talked about it last time actually, that personally I don't see that the business has a future. And sweet, you're online, wasn't sure you would be. So yeah, hi again, Michael. Yeah, like 6 hours, like from, we actually today had a meeting scheduled with our designer, so to brief her on some changes and so on. And then literally 10 minutes before she showed up, our internet decided to say, how about no? And we then needed to do the whole thing with mobile hotspots and so on, was kind of like annoying. And yeah, but luckily enough, like literally a couple minutes after I made the post in our Discord and on the YouTube channel that I might not come online, suddenly our internet worked again, and then yeah, so here I am now. Just trying to learn Elliott waves more, and these two stumped me. I will take a look in a second. I already have them opened up on the other screen. Also, it has been third hearing, and it's scary how little many of them seem to understand, know about the exact situation problem, although they have been working in that area for many years, decades. Well, I think that's a problem that you also will run into in other fields. everybody assumes that people that have a certain job or deal with certain issues actually know what they're doing. It's like very often not the case. Yeah. So, for example, most people assume that their banker has a clue about finance, yeah, but if probably most of you already know more about finance, trading, and how the whole economy works than your average banker does, because he's just an employee that is supposed to sell certain products of his bank without actually understanding the bigger picture and how maybe products of the competition are better, yeah, and I think the same applies. I mean, when it comes to US politics, actually, I'm a little bit. I think the best example there would be the Facebook hearing, where basically one of the, I think, senators asked Mark Zuckerberg, but if you don't, if it's a free service, how do you make money? Yeah, and where Mark Zuckerberg pretty much had to explain the internet to those guys. So I think that's one of the problems there, or maybe in all countries, that the politicians on average are too old, and most, not all of them, there are definitely some that are tech savvy and know what they're doing, or understand that they don't know enough and hire the right assistants or consultants and whatever, or advisors. But most of them like have no clue what they're doing, and don't want to admit that they're simply not in the right spot anymore, shouldn't do the job, or however you want to look at it. Yeah. So, and yeah, so blah blah blah. And there's literally most of the fundamentals to get it at super strong. It's such good DD there. It's amazing what is possible. Okay, you're holding 3-digit shares since January. Nice. Yeah, all it is scary. They sure seem to have skin in the game. If you look back to 2008 and the new haircut regulations, the repo market and the collateral for these short-term loans, it becomes clear why Buffett moved out of banks and that everything is connected, because where do they get the money from? Banks most likely, yeah. Like, of course everything is connected, and of course like those people in quotes help each other. But it's what every one of, I mean, we might not try to, we might have like moral high ground, and if one of us would be that fucking rich or manage one of those hedge funds, we might not be okay, let's short that company to zero for a profit, and who cares about the thousands of employees that will be unemployed then, yeah. But we would still like, I mean, we would still, if or you and your best friends or something, if you for some reason would be super rich and you, I don't know, have a company that produces whatever, and your friend has a company that produces some material that your company needs for producing whatever you produce, yeah, you would likely, in most cases, or maybe you even produce the same product and have a huge market share, you would likely, maybe not knowingly, but because you are getting along very well, you would not, maybe not knowingly or like on purpose, but you would likely collude and manipulate the market, or like, you know, like maintain the price at a certain level and don't try to outbid the other person because you're friends and get along. And I think that's just what it comes down to. There are a few people that already, maybe for generations, maybe their parents, or in many cases likely their parents and grandparents were already wealthy, and so they're just connected, they know each other, and they just are like, okay, we're gonna stick together, we're gonna help each other. And it's kind of like, I mean, it may be really, yeah, I don't want to bring that example, but it's like, I would have a few examples, but they would all be like really not, it would not be appropriate to bring them here. So, but how do you describe that in English best? Like, if you, maybe if you're so focused on your perspective that, oh, that company had no right to survive or whatever, or I don't know, maybe when you're so used that things go a certain way and then suddenly you get, you see resistance, I think it's again human nature that instead of like, oh, I fucked up, people tend to look for somebody to blame. And in our situation, they blame Reddit and deep fucking value for, oh yeah, he started the whole thing. He coordinated people to buy the stock and stuff like that, which is ridiculous, yeah. And yeah, and I don't think anything will ever get better, because in my opinion, whatever regulation comes after a market crash, it's just like, okay, let it appear as if we've done something meaningful, when in fact nothing really changed at all. Yeah? And or when in fact they might close one door But then, yeah, then hedge funds will, or somebody will just come up with a new financial instrument that has a different name but does the exact same thing. Yeah, so it's like, yeah, and it becomes clear why Warren Buffett moved out of banks, yeah, and so on. Yeah, like I think it's, yeah, like I mean, besides the moral aspect of not considering, okay, if we short that company into the ground, there will be thousands of people that lose their jobs and so on, yeah. So besides that one thing, where I also know there are enough like poor or average people that don't have enough of a moral compass. So not saying that that's the one thing that sets those hedge funds apart from us, yeah, because it definitely doesn't. There are enough people with like less money or even, yeah, like average or middle class or slightly poor that also have no moral standards and don't care who they throw under the bus for their own gain. So, but I think that's pretty much it. They're the same, yeah, like most people. I'm not saying the same as everyone that is involved right here, but like the average person in terms of not taking responsibility for their own actions, trying to take advantage from whatever connections they have in order to get them to bail them out, and pointing the fingers or the finger on somebody else to try to blame them, instead of accepting, okay, I fucked up, yeah, and most people do the same, just on a smaller scale, yeah. So it might be people, maybe somebody is late for work like 4 times out of 5 every week and eventually gets fired. Then it's not his fault for being late, but it's likely his boss's fault for expecting him to show up at an inconvenient time or something like that, yeah. And so I think psychologically and in terms of human natures, while the people on the other end, so the ones with the short positions, yeah, like hold those short positions are in some way opponents, yeah. I don't think that when it comes down to like human nature and human behavior that they're so much different from everyone else. I know there's this picture from 2008 when people were demonstrating on Wall Street then, and many people lost pretty much all they had and so on, yeah. And you see some of those investors or hedge fund managers or whatever taking pictures, smiling and drinking champagnes on the balcony. Yeah? But what kind of sample size is that? That's maybe a few assholes that don't only enjoy that they got away with it and maybe made a profit or got bailed out or whatever, but that's like probably a smaller sample size of people that also need to gloat and rub it, yeah, like rub salt in the wounds. And I think the same would be if we take a bunch of regular people and there is a situation where those regular people, like right now with GameStop, take advantage. There will also be enough people, there will be people that will be, okay, great, we made a killing, we saved the company and whatnot, yeah, and move on, yeah. And there will be people that will be gloating, that will be, haha, look, now I'm rich and you're poor, yeah. So I think there, psychologically, that we're pretty much all the same, yeah. I see GameStop being the new Amazon of gaming with all that e-commerce, e-gaming, and whatever else can be thought of. If you like the stock, buy over a period of time to get a good average buy, and of course, trying to catch those dips. GameStop will eventually be worth around 60 to 80 billion in the near future, like 1 year. No financial advice, yeah. What would theoretically happen if the volume dropped to 0? Well, if it would have 0, then nothing would happen, and you would have, like, at whatever the latest price was, the candles would move sideways, like literally no candle at all. So it would just be a white line, because then there would be no buy and no sell orders. Yeah. On the other hand, if it drops very low, an argument, I mean, we had the discussion already once before, an argument can be made when we have high volume, it usually tends to mean that there's a certain trend, so either a lot of people buying or a lot of people selling, which means often high volume means strong movements. On the other hand, the pre-market is the best example that low volume also can mean strong movement. Yeah. So if we would have very, very low volume, but it's mostly people that still want to buy, but almost nobody that wants to sell, then even low volume could get us up quite fast, because then whoever is willing to sell his shares, if they wouldn't sell them at market price, but would say, like, let's say nobody is selling, but there's only one sell order for one share at 162. Well, if I want to buy, I would have to buy that share, which would cause that candle to go to 162. If then there are no people with their sell limit orders and so on, and the next person has a sell limit, so is willing to sell a share at 164, and I want to buy another share, I would have to pay 164 for it, so it would jump up again. So even with low volume, theoretically, the price can shoot up. But more often than not, low volume means that either we see almost no movement or sideways movement because there's no clear trend. It's not like low volume often indicates that there is, let's say, an equality between like people willing to buy and people willing to sell. Yeah, so there's no super great news, or there are not people that are super bullish and oh my god, I need to buy that now before this and that happens because then it will be valued more. And there are also no people or not enough people that are like, oh my god, that's it, we don't go any further, I need to get rid of my shares now before they lose any more value. So that's why low volume plays out like we are seeing in a very boring manner. I mean, on the 5-minute chart, it looks like super dramatic, of course, but if we look at anything like hourly or so, it's just boring to see. But theoretically, low volume could also mean, okay, we go up from here. Yeah, like, so we have huge jumps up or huge jumps down. Margin call and literally nobody sells. Well, if nobody sells, a margin call would actually also not do anything. If literally nobody sells, like not a single person is selling a single share and nobody has a sell limit order at, I don't know, like at 10,000, 50,000, a million or so, because then while the broker or whatever account management of the hedge funds that get margin calls, or of the traders or investors that get margin called, would say like, I want to buy shares, but if nobody is selling, then they cannot buy it, and it's not, they would buy at market price, but if the market price has nothing available and there's also no pending orders or sell limit orders that are like already, that they see, okay, there's somebody willing to sell for 200, for 2,000, for 20,000, then also it would really, if nobody has a sell position, which is like theoretically, but in reality never will happen, not a short position, but if nobody has like some kind of take profit, then like even a margin call would basically, it actually would then allow the hedge funds to somehow look for money and put it on the account to again fit within the margin requirements. Yeah, the low volume means that only very little buy pressure is needed to blast the rocket off if there are no sell walls. And a sell wall would be more volume because it suddenly would mean people are selling at that price. Yeah. On the other hand, the low volume technically, the moment the volume changes, no matter which way, if suddenly more people would be, okay, that's it, I'm going to sell now, and we don't have, currently we lack the buy volume to move it up, and we lack the sell pressure that it falls down. So either way, both are technically or theoretically possible. I consider that we will go up, the way more likely scenario. But it's like always, like the stock will either go up or down. But in this case, like I'm super bullish on GameStop no matter what happens, even if we wouldn't see a squeeze, or if the squeeze would only happen, I don't know, in a year from now. I believe that I might not be able to say when, but like that's again one of the reasons why I like Elliott wave theory, because while we have here our 0.3 at 1,200 something roughly, it's just part of the way, and Elliott wave theory doesn't consider short interest or anything like that. It's literally human psychology or human mass psychology applied, and based on that, that's where we are going according to Elliott wave theory. Now, if we go there fast in quotes, so like with a squeeze, maybe, I don't know, maybe not today, maybe not tomorrow, maybe in a week, maybe in 2 days, maybe in a month, maybe in a year, the point is like, with or without squeeze, Elliott wave theory says we are going there, then we will drop. Don't take that 0.4 here for granted. It's like just randomly put there, and then we go up for wave 5. So, and that's why for me at this point, while it's always interesting to discuss it, but it's like, what does it really matter? Like if you're convinced by the due diligence, either you're convinced there will be a short squeeze, or you're convinced that whatever GameStop does, that it can turn into the new Amazon of gaming, or that at least they're able to turn the business around and become super profitable again and whatnot. Yeah. Well, then what does it matter? It means you have invested in a company based on the value of the company, and you kind of like say the stock currently is undervalued and over time it will achieve its true value. So, and then it doesn't matter, like if we say, even if we would say 1,000 is the goal, so we only go to 1,000 like organically, not with a squeeze or something, well then we are currently at 160. Even if you bought at 480 or 480 was the higher, you would still look at 100% return. So even if it takes till next year to get to those 1,000, or maybe even if it takes 2 years, you would, if it takes 2 years, you still would technically have 50% return per year. Not exactly, because, but you get the idea. So it would still be one of your best investments ever. Yeah. And if we look for people that bought at the latest low around 50 or even 38, yeah, like back here, where do we, or even further back, yeah, it takes a while on the 5-minute time frame to get there. But for those people, if it goes to 1,000, we're talking about way more than 100% return, yeah. So it's like 3,000% return if you bought at 30 something, yeah, or 2,000 if you bought at 50. And for people that are buying right now, so maybe let's say you bought at 200, it's going to be 500% return if you just like, yeah, if it just, only if it reaches 1,000, even if there's no super squeeze to whatever, 10,000, 100,000, a million, 10 million, 50 million, whatever, yeah. So it's like, yes, and then of course it sucks if you only have $200 invested in quotes in terms of the absolute amount, and then you make 500%, but in the end it's like you get out with $1,000, so 800 profit before taxes instead of becoming a millionaire, yeah. But it's still going to likely be one of the best investments ever that you made in terms of return over a period of time, and it got you into dealing with investing in stocks and so on. And maybe you are realizing that that's the right way to long-term invest your money. So even if that short squeeze doesn't happen and you're not getting rich off GameStop, maybe you realized, okay, if you invest $50 per month for 10% of your money every month, that instead of working the next 40 years or 30 years, you likely will be able to retire in 20 or maybe 10 or 15. Yeah? And yeah, but if neither of these apply and you are in for a quick buck, it is the wrong investment. A quick buck of investing with money that is not free, generally a bad idea. Yeah, like I mean, the idea to, okay, I'm gonna jump into that and I'm gonna make quick money if you buy shares. Of course, it's the wrong idea, but if you don't need the money in the near future, so if you use money that you can it's not like, okay, in 2 weeks I have to pay rent, I'm gonna buy today, there will be a squeeze tomorrow and then I can buy the whole building, yeah? That obviously won't work out. But if it's like, okay, I have $300, $400 left that I don't know what to do with, and instead of buying a new Xbox or something, I'm actually gonna buy some shares of GameStop because that's the one stock where I read so much about and I'm actually confident that it will go up. And I don't need that money for the next, I don't know, couple of years. Perfect investment. If there's a squeeze, you're gonna be super happy and oh my God, probably life-changing. And if there's no squeeze, well then it will not change your life, but you will have a great start into investing in general, and you can then start to look for other stocks that have long-term potential. And just as I said, like every month or every couple of months, add a few funds there. And then in 10, 15, or maybe 20 years from now, depending on how much you can save every month and whatnot, where other people will still, like the people that make the choice to buy the new PlayStation instead of investing a couple $100, or to, I don't know, buy the new iPhone every year instead of putting $1,000 every year in some investment, those people will still be working and will work till they die. And you will have a small fortune, and maybe you only work part-time in a job you enjoy because the rest of the money that you need, you can just take from the profit that you make every year and so on, yeah? Yeah, 100%, that is the short difference between poor thinking and rich thinking, yeah? Yeah, definitely, yeah. It's like it already, like it's not even thinking, it starts with the choice of words, yeah? So, for example, to say, you could invest your time and read a book, yeah. So it's saying invest your time, or how did you spend your time, or I spent my time watching movies, yeah. So it's like there already you see the difference. It's like a lot of becoming successful is not necessarily being smarter, better, or anything else. It's literally about mindset and about having a goal. And a goal is not like, yeah, I want to be rich someday, because that's not specific. If you live in the Philippines or in Bangladesh, rich might be $20,000. If you live in Dubai or I don't know, in Switzerland, it might be $2 million. And someday could be, in a year from now, could be the day before you die. Yeah. And so really the biggest difference is like, like mindset and setting goals. Yeah, like, I mean, you might not reach all of your goals, which usually just means that you didn't want it bad enough. Sometimes it's out of your influence, but usually not reaching your goals is a sign for either bad planning or you didn't want it bad enough. Yeah, but I mean, Think and Grow Rich is a book from Napoleon Hill that I can recommend there. It really brings it on the spot and is able to explain what I'm not able to explain in a way that like even a monkey would understand it. Yeah, and that teaches you like what really is the difference between the super successful people that most people envy and the average Joe out there that maybe just complains how bad life is. Yeah, and I kick myself, just got investment and stopped poor people thinking, but is still in my 20s, so there's time. You know, Nick, no reason to kick yourself. Like, I'm now 34, and I promise you, if some of the things that I know today, like, and I'm not talking about like super life-changing things, but if just, I don't know, if I would have, I'm not going to try to shift it and say like, if I would have known somebody, blah, blah, blah. But if I would have somehow got in touch with the real, like one person that would have just pointed me towards the right books or so, maybe I still wouldn't have gotten it because I was too young or so. But like I literally, with some of the things I've did in my life already, to give you an example, before I moved to Ukraine from 2015 to end of 2018, I was in Germany. Actually, yeah, like almost pretty much February to 15 to 16 to 17 to 18, almost 4 years. So like 3 years and 10 months or so, yeah. And for the last 2 years of the time, I basically made 6 figures per year. So like lower 6 figures, a little bit over $100,000 in a year. Had almost no work to do, so like a lot of freedom. Became frequent traveler during that time because I was flying a lot around that much and so on. And instead of invest, I could have easily put aside half of that money. So like 100,000 I could have easily put aside and so on. But instead of doing that, I also I got the new iPhone and I don't know, like a big flat screen and so on, and a new Xbox and a new gaming computer, and maybe go party with friends, or why not make a 6-week vacation to Southeast Asia and so on. Yeah, like obviously I enjoyed life, but I also like spent the money instead of thinking long term. The money that I threw it out the window in quotes for nice experiences, definitely, but for enjoying something right now versus thinking smarter. Okay, if I could have easily saved like, I don't know, like worst case I could have easily put aside like 2,000 per month, so like 24,000 per year. Now if we were to look at, I don't know, like like Dow Jones, let's say 10 years back. Okay, 5 years. So from 2017, yeah, so there it was at 20,000, and now it's at like 35,000. So that's like 75% or so, yeah. So I mean, worst case, I would have put aside $50,000, or would have been able to put aside $50,000. And so could have almost already have close to 100,000. Now if I would have, obviously I would have saved monthly, which means it might have been a little less overall, but then on the other hand, I might have also then be able to buy something at this huge dip that we had last year in March and so on. I don't know, but point is, I also didn't have the right mindset. Like, to my defense, however, I mean, I knew most of the things that I already knew today, but the one thing that really changed things for me is like, I was single, I don't have kids and so on. So the point was like, why should I bother saving? I also like made one mistake that one real mistake that many poor people make. I didn't consider, what if I will lose that income stream? What if I will not make the 100,000 per year without a lot of work and super relaxed anymore, yeah? So that's the one thing where I really where I really was dumb. But besides that, I simply figured, okay, I don't have any kids or so. I'm not in a serious relationship. I don't even know which country I want to live in. So what's the point in saving? Yeah, I'm just going to enjoy. And yeah, like pretty much changed when I met my wife. With her, it's different because yeah, like now it's not just me. So whatever money we make, it's more about, okay, what's the smartest move for us combined for the future? That is not needed here, that channel. Oh no, that's 0, 2, yeah, okay. Yeah, and so that's what changed a lot of things for me. And yeah, and so, and yeah, the only thing, like Nick, I don't know how much money you make if you're a student or so, but what I really can recommend is like start to slowly increase that amount until it reaches 10% of whatever you make. Yeah, so if you earn $1,000, $100 per month put aside for long-term investment. Yeah, if you earn $5,000, $500 per month. Because I mean, while it might require some adjustment initially, but it should be no problem. If somebody is able to live with $800 somehow, I mean, I wouldn't call it life then, but survive with $800, that person likely will also make it work with 720. Yeah? I mean, not that it will be super pleasant. It means like downsizing even a little bit more. But the point is, if you just take 10%, it means the better you're doing, the more you put aside. The worse you're doing, you still put something aside. But it's kind of like, yeah, like it's 10% would be the sweet spot, in my opinion. So, and yeah, you're still early. Like honestly, just look for a compound interest calculator and run the math. Like if you, I mean, with $10, it will not be super exciting, but if you then consider that eventually you have a little bit more disposable income and maybe you are able to put $100 per month aside, or maybe, I don't know, you get some kind of bonus and can dump that bonus into your investments as well. Just run the numbers. Like you start saving now until you, let's say 40, yeah, and then run the numbers somebody that just starts with 35 and saves the same amount or the same monthly payments that you do, and then look at the difference in balance. You will likely be able, maybe not to fully retire, but again, maybe to switch to a part-time job, and the rest of the money that you need comes from the profits that your investments make, where the other person still will have to struggle full-time. Yeah, so, yeah. And Nick, that's very early. I never learned about it until I was 34, had a child, my wife taught me. Yeah, like for me and my wife, it's vice versa. Like she's a little younger, she's now 28, and she didn't think about investment so far and so on. And basically, I'm the one that teaches her a little. Yeah, so think of it that way. Earlier, the better. Most, and I mean likely 85%, just run with saving money, which is burning equity. Yeah. And it's not only that, it's like that they don't save a lot of money. It's like, I mean, even if you, I mean, there's nothing wrong. You should definitely have some kind of emergency fund. So like, depending on how your life is structured and so on, it could be like 1 month of expenses to maybe 6 months of expenses that you have on a boring savings account where you have access to immediately. So your washing machine breaks, that's where you get the money from, yeah. But besides that, it kind of like, there's something like an investment pyramid, you know, like where it's also in terms of risk classes. So for example, having some money in cryptocurrency, definitely not a bad idea, in my personal opinion, not financial advice, as we all know. But going all in one crypto, for example, super high risk, might pay off and make you rich, might also cause you to lose everything you invested, yeah, or 90% of it or whatever. And so you kind of like have to, yeah, like, just think about it long term. It's also not about sacrificing everything. You still should be able to treat yourself from time to time. But the one question is kind of like, do I really need this? For example, when the new iPhone gets announced, and I'm wondering, yes, I could buy it, we could afford it, but do I really need it? No, my current iPhone works perfectly well. There's no reason for me to buy it. Currently, in our current financial situation, it's smarter to put that money and invest it. Yeah, and yeah, like. Especially most people, I think the reason why most people never become wealthy or rich or at least financially stable or secure is because they really buy the stuff that they don't need. Like, and I'm not talking about that you should cut back and maybe, I mean, of course, if you're going to party every week and you spend $100 in the club every weekend or so, well, that's probably not a smart idea. But it doesn't mean that you can't go out with friends for dinner or for drinks here and there anymore. But just like, yeah, like all those unnecessary purchases that you might just buy because it's hip or trendy, or because it's kind of like people would envy you for it. Yeah, but yeah, so I personally don't like luxury. I like basic life and time and helping out people that are on the ground, like I have been several times in my life, and people help me. Well, for me it's different. Like, I mean, I used to have a different life in my time in my life. So that's, for example, also why you see all those Gucci caps and stuff like that. That's from different life, but just proves that the quality of those caps is actually better than the average caps that I used to wear earlier in my life. But anyway, so like I used to have a time where, for example, when I bought an iPhone, I bought definitely the best model in terms of most storage and so on. And I would justify it by saying, okay, it will also have the higher resale value when I want to get rid of it. Yeah, but it was more about to just get the best of the best all the time. Yeah, and I don't know, like it also changed for me. So nowadays, yeah, like I'm also thinking more practical. I mean, Nick says no Lambo here. I just wanna RV and travel the US with my wife. That actually sounds nice, and that's the same thing. Like I like Lamborghini, or I actually enjoy sports cars in general. Yeah, but here in Ukraine the roads are bad, so if I would, first of all, we don't need a car here because Uber is relatively cheap. Again, we work in a home office, so we anyway don't have to leave that much. Then we live in a major city with public transportation and whatnot and so on. But yeah, like here in Ukraine, I would rather go for some kind of SUV or so you don't have a problem in during winters and with the potholes and the, yeah, like road conditions and so on. But yeah. But you're basically already on the right track, because you're not, most people would say I want to have a huge mansion and I want to have a Lamborghini and I don't know, like a private jet and this and that and so on. But you're already on the point where you realize what are your real goals, like what would make you happy. There's actually some exercise that you can do in that matter. It's called the success breakfast. It doesn't have to be breakfast, but it's basically you take a college block, and then once per week, you kind of like go to some coffee shop or somewhere where you are alone and definitely nobody will interrupt you. You turn off your phone and you just start writing down how you would imagine your perfect life. And maybe when you start that exercise in the first week, you would write down, I want to have that big mansion and that Lamborghini and I don't know, like whatever, like 15 girlfriends that all miss something, yeah, and so on. And then every week you go back, you first reflect on what you wrote down so far and ask yourself, would that really make you happy? So you may have written down, I want to have that, I don't know, like Lamborghini again, yeah, or Bugatti. And then you realize, actually, I don't enjoy like getting out from cars where I sit that deep, or actually, I would like to live in a cabin in the woods, so the Lamborghini might not be the smartest choice and so on. So you just refine that until you really get to the point of what do you really want to reach, like what are your goals, yeah? What would make you happy? Where's the point where you say, okay, that's it, that's the perfect life for me, yeah? And when you have that, you also get to the point where you really develop the desire to reach it, which means you will do whatever it takes to get there, yeah? And another, I mean, not here for relationship advice, but another thing that I learned in my relationship is basically make sure that your wife is on board with the RV and travel the US plan, yeah. I've seen most relationships that I see fail is because they don't have the same goals. So your dream might be, and I don't know you personally, I don't know your wife, so like take this all with a salt of grain, of course, yeah. You might have the perfect relationship, but let's, for example, say that your dream would be traveling the US with an RV, but your wife's dream would be to have a beach house somewhere and maybe away from civilization a little bit and just live a relaxed life, but without driving across country or something like that, yeah? Then you would work basically towards totally different goals, which means not always, yeah, like there might be some parallels, but in many cases it means that you're going in separate directions, which means eventually the relationship is like bound to fail, yeah? So in other words, communications in a relationship is a very crucial aspect. If you don't know what your partner wants to reach or what her goals are or his goals are, and they don't know what your goals are and how you would want your life to be, well, then yeah, like it's not gonna work out very well long term, yeah, because you're gonna be working towards different directions, yeah. Anyway, with that, since I've been talking already like straight and didn't get anything done, or not much so far, I'm actually gonna take a 10-minute break. By the way, before I do that, I'm gonna brag here, new merchandise, got that from eToro, only cost me like $12,000, yeah. 10,000 actually, I think for having more than 10,000 balance on the account or something like that. Which means actually GameStop paid for the t-shirt, so thank you GameStop, yeah. But yeah, I'm gonna take a 10-minute break and do follow one of my vices and go for a smoke. And when I get back, I will look at the charts that I think, I don't remember, I think Nick shared them. And yeah, and then we can keep talking about basically like, yeah, the difference between poor people and successful people. It might sound harsh, but it's literally, it's not that, yeah, like the difference in most cases is not that the other guy got lucky or his father was already rich. It's literally in most cases just a perspective difference and mindset difference that makes it, yeah. But anyway, so back in 10 minutes. Don't run away or run away. Either way, I'll be back and then we'll can continue here. So yeah, yeah. Till then. Back again. So catching up real quick. I know it was faster. Anyway, so what do you guys think about putting a certain amount every month in ETFs? So in index ETFs like Standard & Poor's 500 or MCSI to benefit from compound interest? And Nick or Ari says that example, especially when you, Dow historical. If you look at the historical data, there's like a 10-year period from like 1999 to 2009 where it would be like plus minus zero, but after that it also caught up. But overall, and that's only going back till 82 or 80 here. But if you look further, like the Elliott wave theory book has charts that go further back, then you see that over time it's like, it's the way, it's not necessarily that the stocks go up. It's, in my opinion, because if you consider inflation, that your money constantly loses purchasing power, so value basically, but a company still has some kind of, even if they don't have great inventions or great progress, they still usually have some physical value. So whatever the properties they own, the patents they own and so on, they still have some value. So simple, in my opinion, as a result, the stock price constantly has to go up to account for how much is the company worth right now. And that's so, in my opinion, when you pick single stock, it's a little bit tricky because obviously one single company could go bankrupt. But if you pick funds or indices or spread your money among multiple companies in different industries and ideally also different countries or continents, then think of this like how likely is it that, for example, Coca-Cola eventually has to declare bankruptcy? That, I don't know, like Pepsi overtakes them or somebody else overtakes them. How likely is it that Microsoft will go bankrupt? It's not impossible because nothing is impossible, but it's highly improbable. And if you then, especially if you pick funds or bigger indices where you are like investing in a couple hundred or maybe a couple thousand different companies, yes, some of them might not perform well and not grow. Some of them might declare bankruptcy or go out of business for some other reason. But overall, the majority of them will over time actually increase in value. So while you might have like crashes to ride out, it's like last year, like with the crash last year, how many people panic sold to make that dip that big and didn't enter again. So they took the loss and are now the idiots in quotes. But if they would have just patiently waited, there we look from January last year to January this year, they would already be in profit again if they would have done nothing. So the only important thing there, in my opinion, is don't invest money that you need and don't invest borrowed money, and especially like unless you really know what you're doing and you do it very specifically, don't use leverage or something like that, so that you don't have to care about drawdowns. And think of it long term. If you, the people that constantly try to, I know this especially from our experience in digital marketing, where there's so many offers like how I made $50,000 on Instagram and just for whatever $997, I'm gonna show you how I did it. So like I'm gonna teach you too, And there are constantly people that spend like, that's a multi-billion-dollar industry, all those online courses that teach you crap, The guy with the course makes like a fortune, and you just spend another $1,000, $400, $100 for another course that you likely will not finish, and that shows you something that might theoretically work, but that is not something that you would enjoy or that you would be able to apply in the exact same way. And so if you think short term and I want to be rich tomorrow, you likely will keep spending your money on things on so-called shiny object syndromes, like things that, oh, I need to have that because that will make me rich, and you will never be rich or wealthy and never reach your goals, But if you like slow and steady wins the race, like even if my portfolio right now on eToro is down as of morning or today's morning or yesterday evening was down 7%. Now imagine, I currently only have one copier left here, so there were, at some point I had two. One woman from UK, if I recall it correctly, that took her profits and cashed out all her money, which is fine. But imagine if you would have started copying me in January because of GameStop and the 66% return, and then in February you see minus 11, you're like, oh my God, I'm gonna get out of this, yeah? So you took an 11% loss, yeah? However, I mean, I'm quite confident that maybe May might even end in the red as well, yeah, like considering that we're at minus 7, today we're currently at plus 3, so it's kind of, time will tell. But by the end of the year, I'm quite confident, again, my opinion, not financial advice, that even if you started at the beginning of February and suffered the minus 11% here, by the end of the year it will be a profit. I cannot guarantee it, but it's like my personal opinion because I'm also investing my own money here, so I'm actively working towards making it true or making that happen. And even if this year would end in a loss, well, I wouldn't care, like honestly, because then unless I have like a really clear indicator that some of my positions are, something changed drastically and I definitely should sell them. But other than that, I just write it out. I accept that I bought in too early at a very bad time and try to average down further over time. And just write it out until the stock recovers, yeah? And yeah, so blah, blah, blah. Exactly, well, it's not necessarily a pyramid scheme, it's simply taking advantage of people, you know? Like I could also, I could make a course and say how I made 25,000 in a couple of months with YouTube, yeah, and I sell it for $97, and I know I would sell it. I know people would buy it, and then I just in videos share what I did, but it would not necessarily work for them, yeah. And it's like, yeah, but I'm gonna get to that. So good advice, CR. Thank you, Jeff. Are you in the US or UK, Osama, or elsewhere? Germany, yeah. So. GME action got me into stocks. Learning and self-interest led me to study more, and my own becomes more financially responsible. Started thinking, and you know, like I'm not sure if the video is already published because I'm not sure if Irina created the thumbnail, but I'm gonna share one other thing with all of you guys. So when I was younger, when I was 18, actually, I got my first credit card, and because I already had a business and I actually just needed it to get my PayPal account verified, whatnot, and my bank representative didn't pay much attention. It was a gold business MasterCard, pretty much without limit, just with a transaction limit of 3,000 euro. Then I got into I struggled financially, like for whatever reason, doesn't matter. And somehow I lacked the mindset and so on. And it just was so easy to go to the ATM and withdraw money with the credit card. Yeah, so to pay for whatever I need to pay until the ATM swallowed my credit card and didn't give it back. Yeah, and back at that point, I also still super poor people mindset and so on. Well, it's like credit cards are a bad idea because it's so hard to keep track of your spending and whatnot, and basically it's not my fault, yeah? So it's like the fault of them giving me a credit card, whatever, yeah? And I switched to paying everything with cash. So like, okay, if you pay with cash, it's easier, you can keep track and so on, blah, 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 and whatnot, yeah? And yeah, like over time that changed again. At the moment, and that's what I'm still gonna look if the video is live, and just made a video this week about it, like credit card versus cash. And at the moment we have like, I don't know, like overall we have like 20 credit and debit cards, but the ones that we're using are like 4 or 5, yeah. And it kind of like falls into the category, it's easier to make money when you have money, a little bit. Let's check, is the video live? Videos, no, not yet, yeah. But for example, one of the things, it's only available in Europe, it's called, and they might launch in the US, yeah, it's called Curve. And from them you can get a debit MasterCard, starting free and going up to yeah, $15 €15 per month for 150 euro per year, yeah. Now what Curve does is you have a mobile app, and in that app you can add all your other Master and Visa cards, unfortunately not American Express at the moment. And so you pay with the Curve card, but it charges whichever card you have selected in the app, yeah. And I mean that by itself is not worth a lot of money, but there come a few benefits into play. First of all, depending on which, if you have one of the paid cards, you can pick up to 6 retailers from a selection that contains like Apple, Amazon, and some other stuff, where you get 1% cash back from Curve. Second, and that's really the crucial part, especially if you have cards that charge you like currency conversion fees, if I pay with the Curve card something in US dollars, Curve themselves applies, especially on the paid plans, like pretty much market rates, market exchange rates, so whatever, very close to whatever you could find on Google without any markup. Yeah? In comparison, my Miles & More MasterCard charges 1.75% for foreign currencies. Yeah? So if I pay in US dollars with the Curve card, it converts it automatically to euro at very close to the best exchange rate that you could get. And then it charges, for example, my Miles & More card in euro, which means I save the 1.75% conversion fee, yeah, or currency exchange fee. But it doesn't stop there. The real amazing feature of Curve is that for 90 days, so if I buy something today, for the next 3 months pretty much, I can, for each transaction, move the transaction onto another card. And that's especially important because one of the cards I have, it's now a little bit more expensive, is the Crypto.com card, or one of the cards we have. Yeah. Now, I don't buy crypto usually, but last year, now it would require $4,000 staking. Last year it was like 1,500 euro. And so we bought CRO coins for 1,500 euro at around 10 cents per coin average. Now it's at 15 cents average. So we still have those coins, but they have to be staked, so you cannot spend them. Yeah. And that's why we have that Crypto.com card that gives us 3% cash back in CRO rewards. So in CRO coins, which we can exchange within the app into euro, US dollar, Bitcoin, whatever we want, yeah. And also pays for our Spotify and Netflix subscription and some other stuff that we don't use. But the problem is it's not on every expense. So for example, if you, on the gas station, you might not get the reward, yeah, or on some other on some online stores you might not get the cash back, yeah. Now if I would pay everything with the Crypto.com debit card, and then maybe I make a $1,000, for example, I deposit money on eToro, yeah, or on another broker where I can deposit with credit card and no fees, and I would do it with the crypto card, but then I suddenly see I don't get cash back, so I just didn't get anything for the transaction. But because I use the Curve card, I can then, for 90 days, move that transaction onto another card. So for example, when I deposit on eToro, I move the transaction onto my Amazon card, because there, even for financial transactions, I still get 0.5% cash back in Amazon credit that I can spend for my next ebook. Yeah? And so basically, it's not so much about how much money you make. I mean, that's one important aspect, but it's also about spending time and thinking about what are you doing with that money and how you're using it. Yeah? So for us, because I'm currently living in Ukraine, although I still have a residency in Germany as well. So pretty much 99% of all our transactions are in a foreign currency on our credit card. So for us, just switching from, or just using Curve, getting the Crypto.com card and so on, saves us more than $1,000 per year. Yeah. And yeah, like imagine with Curve, because you can move the transactions for 90 days. Let's say one of your credit cards suddenly has an offer. Only this month you get twice the reward points, whatever it is, like cashback or frequent flyer miles or whatever it is that you might want to use, yeah. And then you can go and for the last 3 months just move all your transactions onto that card, and it will be charged today, so to maximize the benefit that you get right now, yeah. And it's like really one of the best things, like so. So far, I have the Crypto.com card since November. There we had the digital version, or the just like for digital purchases, and the physical card we have, I think, since late December. And so far, we made, or the cashback from Crypto.com was like $250 roughly, just in CRO coins. That also increased in value because I don't exchange them. I collected cryptocurrency, and yeah, and so like. I think that's another important aspect too. If you're still like a person that constantly is paying with cash because you think it's the smarter choice, then sit down and look at which credit cards are available in your country and do the math, and you will see that likely using credit cards will actually help you financially. My favorite card and our flagship is, for example, an American Express Platinum card that costs us almost $800 per year. I have that card now for 3 years, and I can honestly say I haven't paid a single dollar for it yet, because with referral rewards for inviting other people to get that card, and then we get every year 200 euro travel voucher which we usually use for some hotel booking or something like that. Then especially during 2018, where I was flying a lot, free launch access at airports. So instead of paying for food and drinks at airports, having free food and drinks in the launches. then whenever we go on vacation and we rent the car, getting discounts at Sixt, for example, or Hertz and so on. With all hotel stays, also usually getting some discounts, like at most major hotel chains. Whenever we travel, free travel insurance. Whenever we rent a car, free insurance up to 60,000 euro damage and so on. So while the car technically costs $800 almost per year, with all the benefits that we get every year from it, we actually turned a profit. Just 2 months ago, they had I really didn't believe it. I actually called the hotline and asked to confirm it. They literally had an offer where we could spend 250 euro at certain stores, and one of them was MediaMarkt in Germany. And so we bought the Apple HomePod Mini that's back there somewhere. Yeah, the black dot down there. And one of our Philips Airfloss, so like for like cleaning your teeth, broke, and we bought that. And I bought another HomePod Mini for a friend of mine and basically offered him like he can have it for half the price. And so I spent we basically spent a little bit more than the 250 euro. And a month later, I got 250 euro back from American Express, plus from my friend, I got roughly 50 euro for his HomePod. So again, basically 300 euros saved, or that I can deduct from the $800 that we pay per year for the card. Yeah. So, but yeah. So, okay, interesting. Slightly different to us in the UK because we have tax-wrapped products called ISAs that you don't pay gains tax on. Oh, that's actually nice. We don't have stuff like that in Germany. Okay, my strategy is keep putting money into funds, but on the side, save money to buy value shares when a crash happens. Definitely makes sense. Like last year, definitely would be a good chance, or would have been a good chance. And I'm sure we have crashes ahead as well. For me personally, I only opened that one portfolio last year in May. As you can see, so it's 1 year now. And before that, so end of 2018, I stopped e-commerce consulting and basically started again from zero. And 2019 for my wife and me, or for my wife and I, or for us, was like basically trying different things and figuring out what we want to do. And then last year we started our software business, and then by May last year, June, July last year, we had the point where we finally had a stable cash flow again, so that we were able to put money aside. Before that, it was we did okay-ish, yeah, but it was more like every month that it worked out pretty much exactly to the dollar that we are able to pay all our bills. And and now we're back in investing more. So like, I'm actually surprised this year changed a lot for us. We have our software business is growing rapidly. So this year last year we already had like between 5 and 15 or 20% growth month to month. And this year we actually have 15 to 30% growth month to month. And we're hiring more people to grow the business further and to provide jobs and whatnot. But we're also putting more money aside. So like, well, basically, I would say one could say we were lucky, but in the end, it's just hard work that paid off, to be honest. Where by the end of last year, when we moved to Kiev, we may have had like, I don't know, 4,000 or 5,000 in savings or so, and or in, let's call it, net worth. And at this point this year, we are at like, I don't know, like in like 40,000 or a little bit over $40,000 or so that we were able to totally put aside or have already like cash incoming on some of our accounts and stuff like that. Yeah. So, but yeah, so check out Vivid also. Their cashback program in Germany is pretty nice, and you can directly invest your cashback, and Vivid takes on your losses. Don't know if it's available in Ukraine though. Well, I still have a tax ID and a residency in Germany, so because I couldn't trade in the Ukraine anyway, like, so it's like, it's funny, it's like one of the countries with the most corruption that I've lived in, but it's definitely the country with the strictest banking laws that I've ever experienced. You have to imagine, so we have 2 businesses. One of them is registered in Hong Kong, and it's basically our official business. So all the payments from our customers, all our affiliate commissions, also the earnings from YouTube, and so all go to the company in Hong Kong. Yeah. And I have a company here in Ukraine that originally was pretty much just set up so that I get my residency permit before Irina and I got married. And now we have it because we actually employ people here and so on. But for the company in Ukraine, because it doesn't have like any kind of dedicated income stream, yeah, no, it's fine. So the Ukrainian company once per month issues an invoice to the Hong Kong company for whatever work our employees do for the Hong Kong company. And pays it. So the Ukrainian company has money to pay the employees and the bills and the taxes and my minimum salary here and whatnot, yeah. But so I own the Hong Kong company, I own the Ukrainian company, and I'm also here in Ukraine, yeah. So, however, my bank in Hong Kong isn't able to directly transfer money to Ukraine. So the Hong Kong company wires the money to one of my accounts in Germany, and I then wire it as the director of the Hong Kong company. I then basically pay the bill for the Hong Kong company by wiring it to the Ukrainian bank account. The bank in Ukraine requires for this, again, keep in mind I own both companies, and I'm the director of both companies. I had to sign a contract between me and my company in Hong Kong, and a contract between me and my company in Ukraine. Again, I'm the director and sole proprietor or sole owner of both, and a contract between both companies to clarify that I'm paying the invoice for that company. So otherwise, the bank in Ukraine would not accept the transfers. Yeah? That's just one example how ridiculous the banking laws here in Ukraine are. So yeah, and yeah, I know we still have charts to look at. I'm gonna do that also in a second. Vivid Money, Vivid Invest and mobile banking app. Yeah, let your money grow. Cashback. Oh, I see they have like 10% cashback stock rewards. I'm gonna look into that. Well, that's interesting. 3% cashback in restaurants outside of Europe. Although I get the 3% cashback. I mean, that's a little tricky, yeah, so on first glance, yeah, so I mean, it definitely looks like an interesting service, but so they have 0.1% cashback on everything as stock rewards, yeah, I mean, I will need to look into the stock rewards further, yeah, but basically, even with my American Express, I get, if I pay out the membership rewards point through payback, 0.5% cashback effective on my bank account. And with Amazon, I would get 0.5% on Amazon credits, yeah, so beating that. Now, I already get 3% cashback on pretty much really, with restaurants, it's never been a problem with the Crypto.com card, and I get it in the cryptocurrency that I really believe in a lot, so that I see will, over the years, increase a lot in value, so beats for me personally stock rewards. That part for online services I will need to look into, and payment abroad, again, my crypto card beats that, so, but yeah, I'll need to look into the stock rewards. Now for Netflix, that seems interesting, but again, as mentioned, so yeah, like, so one thing I want to point out, Crypto.com, in case you haven't noticed when I shared it earlier, they have a free card as well, which offers 1% cashback, yeah, also in Crow coins that you can then exchange, blah, 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 yeah. But so even the first level of the card, where you have to stake $400 worth of CRO, already offers paying for Spotify. I mean, there are some stars attached to it, so they don't directly pay for Spotify. You have to use the card to pay for Spotify, and they reimburse you for up to €10 per month, so for like a normal account, immediately when it happens, yeah. And we anyway get Spotify and Netflix for free here, so, and what else is there? Our Best Money. Yeah, I will need to look into that further, like in terms of what kind of, maybe as an additional service. It might make sense at some for some of the payments we have, yeah. But yeah, it just is another point of, I'm gonna bookmark your code real quick, yeah. Also, I'm gonna share my code for, I need to connect again. I'm gonna share my code for, no, like, will I, yeah, like, if one of you is interested in signing up or getting a Crypto.com card or signing up for Curve, then just let me know. Like with Curve, you basically would get $5 or so if you use the card within a certain amount of days, so it's not super much. But yeah, so I'm gonna put that on my list. Vivid cashback, and yeah. Yep, thanks for the referral link. So vivid.money, R Osama JC said, yeah, bookmarked, yeah. And yeah, like I'm gonna quickly need my phone for that, so. Crypto. And with the crypto card, just on top of that, if somebody decides to go for the Robbie Steele card, so to stake $400 worth of CRO, and you use a referral code, you also get $25 in rewards. So see details. Yeah, so copy that, and I can just paste the entire thing. Yeah, so. The only thing I don't like about crypto.com is that their messages are sometimes a little misleading. Like the message that I just copied directly out of the app makes it seem as if you would have, wrong button, as if you would automatically get $25 instead of clarifying that you would only get that when you stake for at least the $400 card. Sorry, let's go back to the chart for now here. And Curve. But yeah, so the only thing that I'm missing on about Curve, honestly, would be if they would add American Express. Like when they add American Express, it's going to be the one app that I use all the time. And one thing Curve is also good for is if you have a credit card that doesn't support Apple or Google Pay, if it's a Master or Visa card, you can add it in Curve, and then Curve supports Apple and Google Pay. So you can then basically use any card with Apple and Google Pay. So blah, blah, blah. Where's the stupid invite thing here? It's been a while, so settings. Yeah, share and get credit. Okay, invite friends, copy, and go there and paste. Yeah. So that's the affiliate marketer within me, yeah. But the core point is that, again, like it's not just about how much money you make, it's also about what you do with that money. So in terms of look at your spending. Like for example, if you pay for Netflix right now, ask yourself how often are you actually watching? Do you really need it? Yeah. Maybe you don't even have the time to enjoy your membership at all. And so while it doesn't seem much paying maybe 10 euro per month, but it's 120 euro per year that you basically then just pay for a service that you might not be using. Yeah. And yeah, so it's kind of like, yeah, like one of the things, like taking care of how you spend your money and in which way, and if you can get some benefit out of it, makes the difference. Also makes a difference on the long way between poor and rich people, yeah, or wealthy people, and yeah. And other than that, yeah, like another core difference is, again, as mentioned before, if you don't have clear goals, you will not get anywhere, and then it's about being persistent, yeah. So if we take my main YouTube channel, for example, I published more than 100 videos and for more than a year and had like 500 subscribers or so and almost no views, yeah? And I bet that most people would have given up already. Oh, that doesn't work and blah, blah, blah and whatnot, yeah? But I just kept at it, and at some point I actually got smarter in terms of not just blindly publishing, but putting in a little bit of time to think about what I can do better. So what are others doing different from me, and changing my videos a little bit. And instead of sticking with a topic that I enjoy in general, but don't enjoy talking about, transition to the crypto topics and like passive income topics that I really enjoy a lot. And suddenly, like literally so while it took me 14 months to reach then 1,000 subscriber total, then in 10 months or 10 more months, no, not even 10 months, in 6 more months or so, I went from 1,000 to 5,000 subscribers. And this year so far, in basically 4 months, from 5,000 subscribers to almost 40,000 subscribers, yeah. And from earning no money with YouTube to earning at least $3,000 per month from YouTube. Actually more on average, but saying at least, yeah. So it's about being persistent in what you do, not giving up. Obviously not doing the same thing over and over again if it doesn't work, but asking yourself, why does it not work? What are others doing differently that do the same or similar things and that are successful with it? And yeah, it's kind of like, I don't know, like if you would have an investing strategy that you've just found and you start using it and somehow 90% of your trades end with a loss. Well, if you then keep using that same strategy, you might wipe out your account. But if you then put in some effort and maybe backtest that strategy to see how it would have performed in the past, or maybe figure out like, I don't know, could you just reverse the strategy so where you're currently buying, you actually would sell and so on, yeah? And so not just blindly doing things, but also monitoring things and looking at how they work out for you and yeah, like adjusting as you go. So, by the way, that said, so like we said that here we have our zigzag. That could also be labeled as a zigzag, and which would then turn this in a double free corrective pattern. And then technically, it might not be perfect, but tools, I love them so much. Technically, we could look, yeah, like, could look like this, so that this is a triangle, but it could also become, well, actually couldn't really become ABC. I don't think that could turn into a longer triangle. So I mean, we know that this can be labeled here as a very awkward, yeah, it's like, would be a very awkward zigzag, yeah. 1, 2, 3, 4, 5, A, B, maybe more like, although it's still not a nice zigzag, yeah, definitely not, but maybe more like, no, also not, and B would be here, and C would be very drastic, yeah. If that would be wave A, B, C, D, E, and in terms of Fibonacci retracements, that doesn't check out because then our wave here is far too small. If that would be A, B, C, D, no. I also don't think, like a zigzag till down here doesn't make much sense with the spike up there. What does the auto labeling suggest? Yeah, very great. Although this way, 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, but then, yeah, it would invalidate the part before, so cannot be like this. And it also would be a breakout of the wedge to the bottom. So yeah, we'll have to wait and see how that plays out. Now, we're gonna use the time because I already forgot who shared it, but somebody shared some charts to look at for CIDM and AMC. Now, AMC we already talked about last time. I'm going to close that. So AMC we looked at last time already, and basically the problem that I had was that we are going down for a very long time and so on, and I don't have it open here anymore, but let's, not AMC, not AMX, AMC Entertainment, that seems about right, and not Apple, and monthly, so yeah, my historical data may not be super accurate, something I'm looking into, but basically one problem we had is that we cannot really look at it in terms of like we would be weekly, like we would do with other stocks. And with most other stocks, we can say March last year we had 0 and then 1, 2, blah, blah, blah. But the problem is that here, the low is at 191 and this low here is higher at 195, so it cannot be wave 1, 2. And this is kind of like too close to pick this as a starting point, yeah? So to say from here we label somehow 1, 2, or however we want it. Now I'm gonna double check again because as said, my historical data is not always 100% up to date, or like the historical one. So we're gonna check those values here for the lows last year, weekly, and we can also see it here. So here the low is 191 and here the low is 195, so. And that's pretty much the biggest problem we have. Now technically if we label from here, which would be January this year, it's like a little bit risky. Not that it's impossible, oops, too far. But as a result, I mean, even on first glance, it could be 1, 2, 3, 4 extended fifth wave, or 1, 2, 3, or 3, 4 extended fifth wave. So there's definitely an impulse from here to here, so from January till end of January. As we can see, auto labeling does it like this. I would likely say 1, 2 here at the bottom, mostly because of the trend channels that work out nicer this way, but it also works like this. Yeah. Let's check if we have my base channel here, if it works out better. Yeah, I actually like that variation more because we get closer here to that base channel. Yeah, but that's just basically, yeah, like for that we would need to look closer and label the subwaves to see if this is 1, 2, and that is 3, 4, and so on, but it's like not a huge big deal. So technically we could say we have our wave 1 and would now be in wave 2. Now, which leaves us as at a problem because we will need to figure out a corrective pattern. Now with GameStop it's different because we have like a wave that goes down here, a truncated fifth wave, and that finishes at wave 3, and the part that we have here in GameStop is then a fourth wave, which can be a triangle. Yeah. However, here we have the problem that this is a second wave. In terms of relation, it could technically, that could potentially be, okay, this is the end of the second wave, considering how many days it took for wave 1, yeah, and then how many days it took for wave 2, but it's also possible that we're still within wave 2, and in that case we would need to be able to label this as some kind, wrong button, label this as some kind of like double free corrective pattern. So we would look at zigzag, yeah, which likely could end here. Might not be a super nice zigzag, but that's how it looks here. And then we would need a zigzag on the way up, which would then be this one, which likely even looks better, so okay. And so that would be wave W, X, and now we would have whatever other corrective pattern, which could be another zigzag or could be a flat. Now if it were a zigzag, the thing is we would expect a further drop. Maybe not down till here, but you see it's like going down. And on the other hand, if it's a double free correction, this could also be a triangle then, or turn into a triangle. So Elliott wave triangle. Need to remember the shortcut for that once, yeah. Which could then, for example, play out like this. Now, if it were a triangle, most of those waves would need to subdivide into zigzags, and that second one might also do. With the third one, it might be tricky, and we would need to compare the relationship or the sizes of each wave again, and that actually checks out. So like point B is pretty much exactly 61.8, so of this length here, and then that would then give us basically point D, where we obviously fall short, but technically if we from here go up to 11 something, yeah, like I mean or 10, yeah, close to 11, it would then confirm point D, and then we would have point E going down, yeah, so that would be the other option that I see here. Now in your labeling that I had open somewhere here, you have, yeah, like that's the one thing that you have wrong here. So if I, oh, you're looking that close, sorry, you're already sub-labeled here, but your starting point is also at 191, and then you would say 1, 2, 3. Yeah, but you see, if this would be wave 3, so like the bluish wave 3 up here, and then it would be 1, 2, 3. Then that retracement here is that can already not be true, because a third wave always, so this wave here, the bluish one that goes from then here to somewhere, always has to be an impulse. It cannot be a leading diagonal, yeah. And the moment you have 1, 2, 3, this would be a wave 4, and it means it's not allowed to go into the area of wave 1. So that labeling here is already not possible. I would think more likely that we look here at It's still possible that our wave 2 ended here, yeah. But it's also likely or possible that it's more like this, that the corrective pattern in AMC still goes on, yeah. So, but the bigger problem is that we lack like a far enough back history in terms of one that where we can apply without rule violation, because as said before, we could also label AMC in this way. So wait, 1, 2, then the base channel would roughly go like this, which makes this wave 3 and 4, and then potentially wave, I don't know where the low is here. It's hard to see with the volume on the chart. Yeah, 5. Let's scale this a little bit so that I can move the 5 properly. So complaints here that wave 2 terminates. So here the high is like 36.13, and here the high is 35. Yeah, it doesn't terminate higher. 35, 36. So maybe I didn't snap the point properly. Yeah, so so that would be valid labeling, which means this would be wave 1. Yeah, and that's one thing I mentioned. I'm not 100. I need to send an email to Elliott Wave International about that. How do you label that when the impulse pattern would point downwards and actually the next wave would tell us bankruptcy? Yeah, and then our corrective, that would then be our corrective wave 2. So 1, 2, and this wave 2 would obviously go on for a longer time. It retraced a little bit further. So instead of 38.2 to 61.8, it went further. But technically, this here would be valid labeling as well, wave 1, and this would be then wave 2. Now, in terms of the time it took, so here we look at like 7-8 years, and here we look only at less than a year. It's obviously not super nice, but that's the one reason why I'm not, that's one of the reasons why I'm not super confident in this short-term labeling. And on top of that, because personally I don't see a good business case for AMCs and cinemas AMC and cinemas in general. So yeah, but I think if we label it from this low here, then your wave 2 here might be still correct, but the labeling that you do here is wrong then, yeah? So that part here is wrong. So 1, or the green 3 is wrong. So it would be I'm not sure if I can move it. The green 3 would need to be somewhere here, and then 4 would need to be somewhere here, and then 5 would need to be completing this wave 1 here, yeah? And now this would be a leading diagonal, where you can confirm that there is an impulse up here, and you confirm that this is a zigzag down, and that is another impulse, that is likely another zigzag, followed with some other corrective pattern, and then that is another impulse or ending diagonal. Yeah, Pranay, welcome back. Pranay, yeah, and yeah, so this would be then wave 1, making this here wave 2. We see it falls in the area that that wave basis highlights, but then the actual point of wave 2. So I think that zigzag here doesn't check out. So like making this here ABC doesn't fully check out because wave A is so long, and then you have like the short wave BC. I think there we might have, how did we have that labeled? I don't know if we have it on the chart right now. So if we go to, oh yeah, we're not in GameStop, yeah, so we're in AMC. So, oh, but I have it labeled the same, yeah, so from here down here, or almost the same, yeah, so auto labeled, yeah. I mean, that might check out 1, 2, 3, 4, extended fifth wave, yeah, to confirm wave A, B, C, zigzag, so that checks out, and that, yeah, it might check out as a zigzag down here, completing wave 2, and then you would be here in wave number 3, theoretically. Yeah. It's like already looking quite close here on the hourly chart. But considering how that whole thing moves and that you don't go up further here, yeah, so like that would be a wave 3, but suddenly we have an almost 100% retracement. So it's more likely that that's still part of wave 2. So wave 2 hasn't finished yet, and that turns into some some pattern similar to this, yeah. So with like corrective pattern down here, and actually if this would be 1, 2, that would be wave 3, but that doesn't make sense because 3 doesn't break out, so it's definitely not 1, 2, 3. So it's more likely like this in my opinion. We have wave 2, so the green one, the big one, still going till here, and we're still in part of that wave 2 that turned into a double corrective pattern. So a zigzag followed by a wave X of another zigzag, and then followed by a triangle that might play out like this. The first wave here, so the relationship of that wave A to the wave BC is perfect according to Fibonacci relations. Remains to be seen how if we turn around pretty much $11 here or not. So if we go to $11 and then turn around, it would make it likely that this is the right labeling, but potentially it could also be that it is like a longer, if we look in terms of the wavelength, yeah, it could be that this is not yet point C, for example, or actually that should still be point C, but yeah, that it just drags out a little longer like we had with GameStop, yeah, so yeah, that's what I was thinking, a wave 3 in intermediate and a wave 3 in the primary, but the correction right now is messing with me. Yeah, that's why I think that it's actually like this, that we're still in wave 2 here, and wave 2 would have its orthodox end then at the end of that, what looks to me like a triangle. And yeah, this way it checks out more. And then also, I mean, yes, wave 1 here is like only whatever, like from January 6th till January 27th, so less than a month. And wave 2 is already 3 months or getting to 4 months. But it's still, in terms of the labeling, kind of like checks out nicer. And again, the longer that correction drags on, also the flatter, if we use Kennedy channeling technique, if this is the case, that will be our base channel where wave 3 would have to break out from. And very often we see it that wave E actually goes a little lower, so although it shouldn't, but in the book we see enough real-time examples where it happens that it first breaks out to the bottom a little and then shoots up, yeah. And so like a false breakout, so which would flatten that channel even further. Whereas if this would be wave 2 and we use Kennedy channeling technique, then we already are impossible far away of ever making the channel true, because it would expect a breakout here to the top to confirm that we are in the third wave right now, yeah. And third wave movement, usually strong upwards movement, so yeah. Maybe it's technically possible also that this is a similar case like with GameStop, that if we, can I somehow, yeah, like let's just open up another chart. So technically it's possible that we look at something like this. So maybe this here is 1, 2, or 1, 2 could be here, and that is wave 3, 4, and a truncated fifth wave like we have in GameStop, yeah. Now, the first thing we can confirm is that we have our base channel, but our base channel could also be that this is point 0, and maybe that is point 2 and 1, yeah. And in this case, if we take the Kennedy channeling technique, wave 4 will often touch the base channel. So maybe this is 1, 2, or maybe here 1, 2, because it would be the same point. So if we take 1, 2 to here and here, yeah. So then we have a nice base channel that follows Kennedy channeling technique. Then we have the breakout where we would say like, okay, wave 1 parallel through 2. And the moment we have a breakout here, it indicates that we are in wave 4. And then we would have our deceleration channel like this. And the moment we have a breakout here, it confirms that we are very likely already in wave 5. Yeah? So it's also possible that we look at this. Our destination channel is a little tricky here because it would be point 4, which also means technically our point 4 could be here, so our orthodox point 4. And our destination channel then would be point 2, point 4, point 3. But yeah, like we're looking at logarithmic, yeah, so weird. But yeah, like, but we fall short of it. So I mean, the one thing that has to be the case, and it is the case for a fifth wave, is that it recovers at least 70% of the drop of the fourth wave, which is the case here. So we could have a truncated fifth wave here, which would turn this here in the bigger 1, and could then turn that in wave 2 in, I don't know, like where would it be then? potentially the area again, $4 to $6, yeah. So that's also possible if we only look at the data since January, yeah. Personally, I kind of like this labeling here more, because like the first impulse here checks out nicely with an extended fifth wave. The corrective pattern here checks out nicely. Yeah, not all parts look perfect, but overall it looks nice, and especially because the Fibonacci relationships that we have between wave A and then from wave C to wave B, it's pretty much on the spot 61.8, so like explained around page 130 something in the book. So I think that's the more likely case here, although I'm having a hard time to believe that that stock actually will recover. I mean, maybe it's really one of those cases like we discussed last time, that like cinemas will not die, yeah. Maybe, yeah, like hard to say. But yeah, just having a hard time believing that. Yeah, this makes sense to me. It's one of the things I was thinking would be it too, but I think I've fried my brain and ended up not knowing how I would chart the primary two to account for the new correction. Yeah, yeah. Like, I mean, it could still be that it's something. I think those two variants. So like that, this is like maybe 1, 2. And same like with GameStop. And that's actually something that I would have never thought of if I wouldn't have watched Jeffrey Kennedy's videos, that actually we could have a wave 3, that like a higher point than wave 1 with a truncated fifth wave. Yeah. But in this, with AMC, I would like this labeling more, and we would be in wave 2 right now, and yeah, go up from here. So yeah, I need to mark that as unread real quick so that I don't miss it. And yeah, so that's for AMC. So we're in a sideways correction with a double free, right? In AMC, if the labeling is correct, then yeah, it would be sideways correction with a double free. So we could say here combination, and that would then label it properly, or it wouldn't. So W, and then the zigzag up would be wave X, and then the end of the triangle would be wave Y. Yeah, so okay, they are not all points aligning properly. Yeah, great. Screw you. So blue, and yeah, so basically that golden or brownish labeling would be the double free correction. First zigzag, wave X as a zigzag, and now the triangle, which also means if this actually turns out to be a triangle, yeah, and it really looks like one, to be fair, even better than the one that we have in GameStop, then it definitely would be the end of the correction. Yeah, so, but again, for that we would first need to go up to almost 11 to make it perfect in terms of Fibonacci relationships, and then we would drop again to whatever that is, like 970, and so maybe 10, you know, like, because it's a psychological important level, and yeah, and then go up from there. So at that point here is a little higher, not 10.01. Oh no, they're both the same. Yeah, so in terms of labeling, I mean, they're both the same price point, so it could be that this is here or that here, so it doesn't really make a huge difference. Yeah? But also, if we were to just on like very quick try to confirm things, that wave needs to be another zigzag, and we can clearly see A, B, C. Not perfect zigzag, but still. This wave here would need to be another impulse, and we can see roughly 1, 2, 3, 4, 5, or 1, 2, yeah, like basically with an extended fifth wave, or 5 is actually here, yeah. Now, this wave down here would need to be a zigzag, A, B, C. Again, not perfect, but still. This wave here would need to subdivide into a zigzag, A, B, C. This wave here would need to subdivide into a zigzag, which currently is not yet the case, so, or it could be A, B, I don't know, like, yeah. We would need to look closer there to see if that also is a zigzag, but we also know in a triangle 4 out of 5 waves subdivide into a zigzag, and one could be a more complex corrective pattern, yeah, so, I mean, all 5 could be zigzags, but one could be a more complex corrective pattern. And here as well, we could probably say 1, 2, or 1, 2, 3, 4. So like from here, from the high, the drop down 4, 5, so we can confirm that as well. Yeah. Now here to label it, we would need to look closer again on lower time frames, but overall that labeling is what I think checks out the most. So which would indicate AMC actually will go up again. Yeah. So like in the nearish future, I mean, talking about a few days to come up to that level again, and then a few days, maybe it's longer, but if that labeling is correct, like before the end of May, we should actually see the end of this sideways movement. And then people would also be running around and say like, mother of all wedges, yeah, more or less, on a, not channel, but line. So, which we actually, like, wrong button. Oh yeah, so like even from back here, we can already label that. And that here we can probably label from here already, or almost. Yeah, so like, although the triangle itself would be labeled from this point to that point and from A to C, so from those 2 points. But we see that even if we go further back, that we would have a super big wedge, yeah, so. Technically, however, like that's one of the things, so we cannot label the area before that because we don't have like a 1, 2 that we can label properly, which leaves us with the 1, I mean, technically somehow this could not be 0, 1, but could be something else where, I don't know how, but technically or theoretically, maybe this would be a wave 4, and the whole thing here would be a triangle, zigzag, A, and then I don't know where B would need to be, so B could then be further down already, C, D, E, and so on. Yeah. So, but I think the labeling here is the one that makes the most sense for AMC. So, I think that's done. Yeah. So, and AMC seems to have an optimistic outlook. I think the CEO stated yesterday at 3.2 million. Oh, okay, cool. Yeah. And they have 1.2 billion in liquidity now. Cool. We're in a sideways correction. We have blah blah blah. Awesome. Thanks. Yeah. So, and the second chart was this one here, CDIM, whatever that is. Yeah. I'm gonna look that up. And yeah, I'm gonna keep AMC for now. So CDIM, that was it, yeah? No, CIDM, yeah. Short-term memory. Yeah, we can close that alternative chart, and there. Pooh, yeah, like. I mean, that's really the tricky part since IPO, like, yeah, like, you see wave 3 would already be projected to minus 112 if it would be 1, 2, yeah, and the problem is where do you start here, like with that one even harder, because that also starts to look like a triangle pattern, which obviously doesn't allow us really, or doesn't make it really nice to say 1, 2, yeah, and like if we so I don't know how to label that at all looking on the weekly chart now. And for you here, if we zoom out, where do you pick your starting point? September. What? Is my historical data off? So that's like, that's November, sorry, November. Am I looking at the right chart? It's definitely like it has the right price, 127. You're looking at it on hourly. Okay, let's try hourly. Maybe like I'm just... Huh? Am I? Yeah, well, whatever. Like, so, okay, you're labeling from here, yeah. Yeah, keep loading. Yeah, while it's loading, how we're doing, how much do we have recovered. %, okay. Okay, so basically you know, like Kennedy channeling technique is really one of the nice things. So if we would say like maybe this would be 1, 2, like this would be 1, 2, and then that would indicate, that actually works out nicely. So it would indicate 1, 2, false breakout, actual breakout for wave 3. Wave 4 touches the medium of the channel, so that would be either this 1, 2. I mean, based on this channel, it would be 1, 2, and 3, and 4, and that would likely be already wave 5. So truncated fifth wave, or yeah. So that would be, although the auto labeling will likely come up with something different, but yeah, so it would say 1, 2. And then if we try to confirm that as an impulse, looks like a diagonal, so, and quite nice like one, to be honest. And yeah, not sure if that checks out like a zigzag like that, but probably more like a zigzag like that, and almost perfect probably. So 2 days and moving in price. It went a little bit further, but in shorter time, so yeah. And then that would need to be wave 3 already. But that could also be A, B, or A, B. Gonna be tricky to confirm that as a zigzag though. C, and then that would also mean that we're here looking at a double free corrective pattern in some way. Also, if that is a, oh, it's labeled as an impulse, so, okay, it's very close to being an impulse, so wave 4 doesn't go into the area of wave 1, yeah. And other than that, that would be a leading diagonal in some way, so like 1, 2, 3, 4, 5 or so, but not a nice one. So like that will be hard to confirm this is wave 1. And yeah, then either we are already in wave 3, which based on the looks here, hard to be sure of, or it's the same case that we're still here in wave 2 going with this labeling, yeah. Or, as said, the alternative, so that what I think of based on Kennedy channeling technique would be to say, okay, we are basically having our 0, yeah, like try again, 0, 1, 2, 3, 4, truncated fifth wave, which, yeah, like in terms of, let's check destination channel. So if we have this and this, yeah, we fall a little short, but we reach the median and even higher, which obviously if we have a truncated wave, we always will fall short. But yeah, like for the overall look, I think it's not too bad. Question is, can we confirm this as an impulse? Yeah. Also not perfectly looking, but that's pretty much still like similar to what we had before where it was 0, 1. So we can confirm this. We can likely confirm this as some kind of zigzag, so A, B, C. That here looks like we can confirm it as an impulse. This down here, again, A, B, C. And then this here might be a little trickier, but probably still possible to label as an impulse. Okay, no. Let's check. Not so far. 1, 2. Yeah, it's like challenging. Or which in that case then could indicate that maybe this is still wave 4 then, yeah, so, and 5 is yet to come. So that we have a, maybe the whole thing is a big zigzag like this, yeah, so, although then this would need to 1, 2, 3, 4, 5, I mean that would actually check out. We can subdivide this into an impulse. We can likely subdivide this into a zigzag, and which means we would have to subdivide this into another impulse, although not as extreme, so I would more likely say that this is 1, 2, and 3 with currently wave 4, and we probably will not get wave 5, or there it's at minus blah blah blah, yeah, so go there, scale again, and so it could also be an ending diagonal, so although it complains here that we retrace, so then it would be an ending diagonal, and then the question is our destination channel would be somewhere here, so that wave C would be this point, would also be 0.4, and would then actually be, could be in the middle, so it doesn't have to reach the bottom if it's an ending diagonal, but could potentially be, for example, let's pick the sweet spot here at $1. Yeah, but yeah, so wave 4 terminates, but that's, yeah, like if we would not call it impulse but ending diagonal, that would not be a violation. So yeah, so I think here either wave 1 finishes here and we're still in wave 2, in which case this could still be a big zigzag pattern, yeah, or which actually, even if this is wave 1 and this is wave 2, still checks out. So even with the first labeling, 1, 2, and we would then pretty much have the same labeling, so we would still say that this is just a big zigzag pattern, yeah, and likely have a target at like, yeah, like around $1. So like maybe close below $1 or so. So, or more like a flat correction in that case, yeah. So not a zigzag, but a flat. So, and yeah, and so I think that would check out. But again, problem, we don't look far enough back, yeah. I think in those cases, like, while it might be correct like this, it might also play out differently. I then rather would go and pick a stock that actually has enough history where you can, like, look at Tesla, look at, I don't know, like there's so many stocks out there that just follow mass psychology more because they are more popular and that you can label better. Yeah, like if we take Amazon, again, my historical data might be broken for it, yeah. But yeah, I mean, there clearly we cannot label this here from 97 as 1, 2, but from here on out, we definitely can label this, for example, as 1, 2. And if we would do that, we would get I mean, probably my historical data here is off. Then it would indicate that we're still in wave 3, for example. Yeah, like, I mean, zoom in a little bit to flatten the whole thing. Yeah, so, but there, even on first glance, like 1, 2, 3, 4, extended fifth wave. Yeah, so wave 1, which then would make this here wave 2, potentially, or cannot be because we have the low here. Although I'm not sure if those are real, so I'm gonna have to check there. So like, really need to fix the data feed issues. Like if you cannot trust your data, you're kind of screwed. Yeah, so there are no spikes like this, and probably my prices also. Yeah, you see, my historical data here is wrong. It actually was lower. So like, yeah, like pick stocks that are more popular and have longer history. Like you can easily say 1, 2, and basically we're still within the biggest wave 3 here, 4, 5, yeah, because we never broke out from the channel, yeah. So, sorry, wrong button. So we never broke out from the channel. And even if you were then to go to lower levels, you would say 1, 2, or maybe 1, 2, and you would still be in wave 3. You still haven't broken out from the channel, yeah. And so while there might be a drop coming at some point, or actually first we would need to see an even faster rise to really have a third wave, so that if we use Kennedy channeling technique. But so, yeah, plenty of stocks out there that might not, in terms of percentage move, have the potential to rally, I don't know, like from $1 to $10 or something like that, yeah, in a short period of time. But where you, at least with Elliott wave theory, have like way better, or like can with way higher security or accuracy or whatever, say, okay, this is the labeling that really checks out, without like, I'm not sure where to start and so on, yeah. And yeah, did we have some movement in GameStop? No, we're still moving sideways. So much fun, yeah. God, I'm gonna start to hate that corrective patterns, yeah. Question is, again, like one of the waves can always be a more complex corrective pattern. So it could also be that this here, that's the funny part, that this here is still part of wave 4 of the orthodox end of wave 4, and that this here somehow turns into a ABC, or like something, and followed by another something to finish that off. So, I mean, at this point, it's like that part, like, it's getting slightly boring to be fair, but at least we know like, yeah, like at some point we move upwards with, at least I think we will, in my opinion, not financial advice, blah, blah, blah. And yeah, like the moment we finally have a clear breakout is the moment where we will be able to make a sense of the whole corrective pattern mess. Yeah, but yeah, so in terms of other stocks, like actually let's look, so we talked about Fiverr earlier, which I labeled yesterday, and where, as mentioned, I think we might touch that channel. Maybe that's already our way 4, and then it will drop further. I didn't bother to try to figure out precisely how far we would go or could go, but yeah, like I think that seems about right, because likely this year is wave 3, 4, or wave 3, 4, and so that area would be right. And I think I don't hold Fiverr right now, so just double check that I'm not holding it. Lemonade did horrible the last day, I guess. Yeah, I mean you can see it anyway in the that here we are down so far. I'm gonna take a look at it. I actually, so this week we had a few discussions, especially today with our designer, about like, yeah, like recreating my website. So as mentioned last week or on Monday, where I talked about like what maybe the best idea is to share predictions or forecasts, and also have an easy way to quickly look up what was my last forecast and did it come true or not. And yeah, and I'm currently thinking about how to pick stocks in the future. So I used to mostly pick stocks that I personally know the company and believe in and whatnot, yeah, and then still do Elliott wave theory or apply Elliott wave theory and buy because of that. But this year I somehow also fell victim a little bit to shiny object syndrome with things like Tilray or yeah, Lemonade, and so kind of like jumping into stocks I'm not super or I'm not super familiar with, or I'm not super familiar with their product and company, yeah, and it's kind of like biting me a little bit in the ass. I thought one idea would be like, I'm always thinking about how can I combine things and maximize them. One idea I could come up with is if I take, for example, let's say the biggest 50 or biggest 100 companies in the Standard & Poor's 500, yeah, because I can have up to 100 tickers active with my subscription. If I wanted more than 100 for every additional 100 tickers at the same time, it would be $30 per month at Interactive Broker. So it would also mean I could remove my European data subscription and save a few dollars per month there. But basically to pick the top 50 or biggest stocks in Standard & Poor's 500, which would ensure that those are big stocks. So that definitely more likely than not, Elliott wave theory applies very accurately. And that those are popular stock, which means when I post something about it on eToro or on my website or whatever, that there will be traffic and so on. So, and then basically just whatever, like every week or in certain intervals, label all the stocks. So it would be initially obviously some effort to really label everything and share my initial predictions for each stocks, but I could say if I pick 50 stocks, I could say for 50 days in a row, every day I will label one stock and post the prediction on my new website, in quotes, yeah. And then if we are in a wave 3, or basically if I see an upwards movement, I invest in that stock. And if I see we have a corrective pattern, I just don't, which means if I do it technically, it would allow me to easily beat the Standard & Poor's 500 index because I'm investing in stocks within it. So, and I'm picking and kind of like trying to filter out stocks that I don't want, yeah, or that I think will have a corrective pattern. And it would help me in terms of marketing to get more traction to my eToro profile and so on. So I think that would be one of the ways to go. And yeah, I actually wanted to this week go over my portfolio and maybe think about rebalancing parts of it. So closing some positions simply for, okay, not necessarily to, okay, let's take the loss here, but to, okay, I need time to reevaluate, yeah? And yeah, so, and I think Lemonade was one of those cases where we run into the same problem that I just mentioned with like the stocks we looked at, where we don't have a lot of history. It's like or maybe I don't have a lot of history. Like, see, that's the point. Like, I don't even know when they went public, yeah? Yeah, so we have the full history. So while technically this could be that this was, what's the low here? 49. And just checking, double checking here. So, and let's say weekly. Yeah, so we went lower here. So technically we could have a start in August. Yeah, so September, August, so somewhere here. And technically this could be wave 1, so 0, 1, 2, making this our base channel, which means technically the correction could touch the median here, which would make this a wave 1, 2. This would be wave 3. So let's double check. If this, that would mean that the moment we have the breakout from here, it would confirm that we're in wave 4, and then we basically would currently be waiting for a breakout from this channel to indicate that we're in wave 5. So using Kennedy channeling technique, and so it would from here to here to here, wave 3, and then wave 4 would now be here, and wave 5 would have a target of, ideally, if it's not a truncated wave, of, depending on when it happens, but the target would be the top channel here at like above 200, yeah? So question is, how do we label that corrective pattern? And the other question would be, is this really already the start where Elliott wave theory applies, or will this like if we look at AMC, where for the first couple of years it went down, so is this just like a temporary hike up, and we actually have months or even longer of drops before we actually fall into an Elliott wave theory pattern? Yeah, so that's kind of like the problem I have here. And yeah, that's what I'm thinking about. So in terms of, should I cut all those positions and cut my losses here? And basically, I mean, I'm literally thinking about if I should go ahead and, other than the stocks that I'm invested in that are in the Standard & Poor's 500 and are big enough, close all the positions, no matter if they are profitable or at a loss right now, and kind of like regroup. Yeah. So, but I will decide that over the weekend probably. Yeah. And yeah, I thought I'd try penny stocks, but then I learned about Elliott waves thanks to you. Really appreciate it. And now I've been reading and learning basically every day since you first posted on Reddit. Well, glad to hear that. I mean, as mentioned, I'm saying it anyway often enough, like every time somebody else shares a prediction or a labeling or a forecast or whatever you want to call it, it helps everyone else involved. Yeah. Now, I already forgot how I labeled that, but you also have it like similar, wave 1, wave 2. But I don't think this would be wave 2 here, again, because then that would need to be 1, 2, which the retracement is kind of like too big, because a third wave should be bigger. So I would definitely think that this wave 2 here that now disappeared somewhere magically, yeah, but it's like more likely 1, and this would be still wave 2. Or as said, 1, 2, 3, 4, 5, so 1, so this point 1, and with a truncated fifth wave basically, because it's slightly shorter than this. And this is still our wave 2 that might turn into some kind of double free or triple free correction. But bigger problem, as said, yeah, is, I don't know, like I think I mean, really thinking, what's the goal of my investing? Yeah, like the goal is obviously to make more money than what I would make on regular saving accounts, but it's also to make it with a reasonable risk and with a reasonable effort in time. Yeah. Now the other goal, why do I have an eToro portfolio when I also have now Interactive Broker that integrates well into the software and so on, is the Popular Investors Program. I mean, I mentioned it before, so in case you're also looking into it, so like just so in case you forgot, Popular Investor. So when people start copying you, and first of all, you need to fulfill certain requirements in terms of maximum risk score, maximum drawdown, and so on. And when the first people start copying you, you don't get anything. Yeah? But once you have 10 people copying you with a minimum copying amount, so amount under management of 50,000, you start to receive $400 to $800 every month. If 400, if you had a losing month, basically, so if your amount under management decreased because either people stopped copying you or because your portfolio dropped in value, yeah, so which means also the copied money drops in value. 800 whenever you have a profitable month, yeah. And then when you go further, you also have to do some courses and qualifications, which actually I think is a good thing because it forces you to go through some certifications. And those are courses that likely you have to put in 100 hours of effort or so. And when you pass them and you fulfill the other requirements, you start to get a percentage of the money that invests you. So, and if you reach the highest level, for that you also need to have more money yourself in the account. So basically in the highest level, if you would say you have, so you need 10 million in money that copies you. Yeah, that's like the requirement. But you would at least get 2% of that every year, paid monthly. So if you're on that level, you basically make $200,000 per year just for trading and managing your own account that should have at least 50,000 in it. Yeah? And so that's obviously the goal, to work our way up that ladder to turn our eToro portfolio, first of all, to help people make profit by copying, and second of all, to turn this into another income stream that potentially at some day, maybe not, obviously not in a year, but maybe in 3 years, 4 years, 5 years, brings us another $200,000, $300,000, $400,000 per year in revenue, doing something that I actually enjoy. Yeah? And so I think that maybe the decision to get rid of all the, let's call it penny stocks or all the smaller companies, and just focus on the Standard & Poor's index. So first of all, I would save a little bit of money on the monthly subscription for the data feeds, because I wouldn't need any other than, I would then have the US subscriptions that cover the Standard & Poor's, and maybe the subscription for the indices, so I also can label the entire index. And second of all, again, I guess there are more people Googling for whatever, like, I don't know, Apple stock forecast or something like that, than there are like for Palantir stock forecast. Yeah, I mean, besides the stock being in a merger and so on, yeah, or just merged and whatnot, yeah, or Tilray merged. Sorry, not Palantir, Tilray merged. Yeah, and I think that would be the right thing to do, and I'm gonna finish that thought process over the weekend, and then depending, yeah, like considering that, then depending, like decide to just take the loss in some of the positions, although I'm confident they would recover over time, but rather like, yeah, like it feels like during this year with GameStop specifically, then I spent more time with trading, and therefore I spent more time looking at what other people are looking at, so which stocks are they discussing, and then again, don't forget, like if you remember my first post on Reddit, my Elliott wave skills back then, especially with corrective patterns, were way worse than they are now as well. So I jumped on a lot of things that were popular and probably mislabeled the charts and kind of like mismanaged my account slightly. I mean, it's still up 40% this year, so the popular investors portfolio, it's still more than what average popular investors have in return, so still nothing to hide behind or like hide. But yeah, like I feel like I just have to get a feeling for it. If I pick the top 50 stocks in the Standard & Poor's, then I think at any given time, like maybe even in a way that I say I consistently or continuously label the top 50 stocks in the Standard & Poor's, but I at any time only have a maximum of 10 positions open. So whatever out of those 50, whichever stocks are showing that they're currently in a wave 3 or in an upward movement, I would then basically put 10% of the money in there, and yeah, until either my labeling gets proven wrong or it reaches my whatever profit target, and then see which other stock is currently pointing in that direction or like shows the potential out of those 50 in the Standard & Poor's. I think one of the I mean, I'm also open for feedback here, and I would appreciate feedback how you guys perceive that, not only from an investing perspective, because again, my goal is not 100% to have amazing returns in my portfolio, but to have consistent returns within the requirements of the Popular Investors Program, and actually provide people with a safe and consistent or a safe way to invest, so they make more than they would make otherwise without them having to trade themselves. But for us actually to then make more money by people copying us, yeah. And I think if it's, for example, about, as a popular investor, you also are supposed to explain your trading strategy on your portfolio. And if I clearly explain like that I don't think it's possible to really properly follow and manage like hundreds of positions in different stocks and cryptocurrencies at the same time, and that's why my approach is to continuously, maybe daily or weekly, update my analysis and forecasts for the top 50 stocks in the Standard & Poor's, and therefore then only invest in those that I can see you have short-term potential or something like that, then I think like that might be easier to understand for potential copiers, but also easier for me to manage. So then we would have 50 stocks here in the watch list. So I would create a second watch list that is only for the top 50 Standard & Poor's stocks or so. And then maybe every week or weekend, maybe in a live stream, I don't know, I would then just go through all 50 and check my labeling and update it. But simultaneously, I would also, again, initially 1 stock per day or 2 stocks per day, and post their initial prediction or forecast on my website, share that also on eToro where it gets traction, because people that look at a certain stock or invested recently in a certain stock or are currently invested would see the post with my forecast, with a short description and a link to the website. And obviously the website would have a, enter your email here to receive real-time updates, where you can, where in the first version it would just email you about any update, so even if it's about a different stock. And in a later version there would be a checkbox, I only want to receive updates for this specific stock, or I want to receive all future forecasts, And so it would also help us grow another email list where we can then promote, I don't know, like if a broker has a great offer, or where I can set up a follow-up email campaign marketing the Elliott Wave Theory book or so, where we have get some affiliate commission when people order the physical copy and so on. So like I think that's the way to go, like at the moment. Like not 100% sure, still, as mentioned, still thinking about it. We'll think about it during the weekend and then take it from there. But yeah, that's pretty much what I think is like the approach that will provide the most value for people that are following, in terms of either if they're copying on eToro, or in terms of if they are like just following me and whatever my opinions are. But also, why is it not connected properly? But also the most value for me or for me and our business in terms of include, so but it's not included, okay. And so GME ripping, we're on the wrong stock, still sorry for that. Yay, there we go. So like without knowing it better, let's say this is wave 2, so zigzag, zigzag, zigzag. So not a nice zigzag downwards, but zigzag, 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 kind of like checks out in some way. Like we're gonna figure this out later. So I mean, like it's not a super big movement, and it's not yet the breakout of the big triangle, but it's a start. That would definitely be a third wave move, by the way, like compared to the other movement, So, and now the question would be, where would be, technically could also be that wave 2 somehow ended here. Now then obviously that would not be the zigzag, or it could be, I don't know, like we would need to figure out how to label it, 1, 2. What if the whole thing is A, B, C as a flat correction, and that would be an impulse or a leading diagonal? And then basically maybe here or so, or here would be the start of our new it could be then that we here have our new 1, 2, and this would then be wave 3 of like a very small degree, of course. So wave 3, and now we would wait for a drop down here, wave 4, wave 5, which would then make up wave 1 out of this wave 3 impulse here. So soonish. Huh? No, you can, I mean, how long does it take? Like, what do you think in terms of like, what do you want to make? Oh yeah, then whenever you want, then, I mean, uh, it still amazes me that there's still buying power though for GameStop. I really thought we'd be trading sideways until some sort of catalyst. Yeah. Well, I mean, honestly, I mean, yes, it's a decent movement for today. Currently almost 2% up. But honestly, like, I mean, if we zoom out a little, I mean, it's not, yay, a lot of buying power. Like, and the question is, how much does it actually take? I mean, to cause that. So here we have, according to my data source, 75,000 volume. So it's like not, yeah, like. But I mean, I think there is still, I don't know, for example, what would be interesting to know is on which dates, if they're fixed in the US, on which dates every month or every 2 weeks or whenever the US pays unemployment payments, yeah? Like, I mean, I don't want to sound like judging or something, but I bet that a lot of the people that are hoping that GameStop will change their life are not in super stable financial situations. So it's possible that a certain percentage of them is unemployed and uses some of the unemployment benefits or payments that they get to invest, yeah. And that would then, you could then basically look when that's the case, yeah. And so there we might have a, I don't know, we could go up further here, of course, yeah, so that could not be yet wave 3, but it could also be that this will turn into an A, B, C zigzag that takes us like maybe on this line, maybe close to it, to make a wave 4 on that small degree. And in terms of buying power, I mean, it's even me and like, I mean, now I've reached the happy wife limit, yeah. If I buy more, I don't have a happy wife anymore, and that's not a risk I'm willing to take. But yeah, like so many people that have been buying basically since January, so, and keep buying, like they every month they have some kind of income, maybe it's some, again, social security payments, maybe it's from their job, and they use it to buy more shares every time there's a bigger drop. Oh, okay, why not? And it's like the same thing that happened to me, where initially we had free shares in this account, and then eventually let's make it 5. Oh, why not make it 10? Yeah, and yeah, Osama agrees. Same here. Happy wife, happy life, but less GameStop shares. Yeah, yeah. Well, honestly, I think I mentioned it. I think at some point it also becomes greed. You know, like if you already, I mean, combined, I now hold on eToro and Interactive Broker 90 shares. Yeah, so as mentioned, if it only would go to 1,000, it's an amazing profit. I don't invest in GameStop necessarily because, oh my God, it's going to make us rich and we never have to work again. Whatever if it were to go to 1,000 alone, that money alone would allow us to, I don't know, even if our business would go bad in quotes, still keep paying salaries for months to come. Yeah, so to turn our business around or something. And if it really shoots through the roof and we have a short squeeze and whatnot, well then I still will run our business and use parts of that money maybe to speed up hiring process and so on. So it's like, and just buying more GameStop shares, it wouldn't really change a lot for me personally. Yeah? So at some point, I think it becomes greed, yeah, like an unnecessary risk, because again, while so many different due diligence analysis point towards the moon, we don't know if the other side still has something like cards or aces up their sleeves, even though that might be illegal aces, yeah, but still that they can play and screw the whole thing up somehow. Curious to see if this would be wave 1 and 1, 2 are wrong. Like we already learned that Fibonacci retracements play a huge role. So, and actually the next level would be here, the 423% level. So at 168 would be the next Fibonacci level that we might get to see before we then build our wave 4. I also think that it actually would check out. If we say here 1, 2, then we could easily say 1, 2, 3, 4, and that will be wave 5 of that smaller wave. So, and yeah, we said 168 was the next Fibonacci. I'm gonna just put it back, so let's see how close we get to that extension level. Maybe we don't get there, yeah? Then the question would be, what level do we have here? Obviously, I just have the pre-configured levels visible, and so my portfolio is turning around today a little bit. That's nice to hear. So 3.3% in the popular investors account, so pretty much already half the loss of this month we covered. And in our bigger account, where we are 90%, GameStop, also, we've already seen better days there as well, yeah, but 2.7%. Oh, Osama, by the way, something, since you're in Germany, you might also want to consider, I mean, just like as to diversify, to invest in at Aux Money. It's like for personal loans, so you invest money, or you have your investment account, and then other people can say, okay, I need 10,000 euro for whatever, like a car, and can apply for a credit. They also have then their like verification in terms of Schufa entries and stuff like that. And you can basically pick the loans you want to invest in and start with as little as 25 euro per loan. So you can say, okay, and the interest you get if there's somebody wants a loan with like a good credit score, so no negative Schufa and so on, then it's around 3% per year. And for higher risk credits, it goes up till like 15% per year. Yeah, obviously there you have the higher risk that you don't get your 25 euro back, but they also have like an automated investing where you can kind of like configure some rules. But for that you have to deposit at least 1,000 euro, and then they use the 1,000 euro and basically automatically pick credit projects for you and invest in each of them with a minimum of 25 euro. And then you can also set up automatic reinvesting. So from whatever you get back in interest payment, that it automatically also reinvests it according to certain rules. And it's kind of nice because unlike investing in stocks, where you just give your money to somebody else who sold the stock to you and you rely on the success of the company, you're actually helping people because you are the one that makes it possible for them to get a loan instead of getting the loan from a bank. Yeah, so you're kind of like your small bank in that manner. Yeah, and yeah. Although I have to say, in my experience with Aux Money, to also be fairly fair, or to be fair, it makes more sense to manually pick your credit projects because you also have to pay attention because there are like people, when you look closer at the credit project, you see, for example, the user already had one successful credit with Aux Money. And then you look at that and you see 2 years ago he requested a credit of 4,000 euro and paid it back, and now he's back requesting a credit of 15,000 euro. So it kind of like seems like and sometimes it's even worse. You see, they took a credit of 4,000 euro like a year ago and didn't finish paying that back yet, But now they want to take a bigger credit, which would pay back the old one, but is overall bigger. So it's kind of like, okay, we borrowed 4,000 euro last year and we paid back every month on time, but we didn't pay back everything. But now again, we need more money, yeah, which kind of like is a little bit like a pyramid scheme. Okay, I borrow money today, I pay a little bit back, I borrow more money, I pay a little bit back, I borrow more money until I reach the point where either I don't get my new higher credit approved, or the rates or the monthly payments become so high that I'm not able to pay back consistently anymore. So manual selection of credit projects definitely beats the automated investment thing. But yeah, it's like, yeah, I used to do that a couple of years ago when I was still living all the time in Germany. And yeah, I still have a couple €100, so not much there. I cashed out most of it, but I still have some money there left. And yeah, like, so only downside is you have like long term there. So the shortest credits that you will find are like 2 years, and it goes up till I think 5 or 6 or maybe even 8 years. So like it's been a while since I checked. Could even be 10 years, yeah. And obviously, if you give somebody $25 or €25 and they pay it back over 6 years, their whole loan. So every month you kind of like get a few cents from that loan back. So, but it's still, you know, it's like, it's kind of like doing something good because people, they still apply in quotes at the bank more or less, yeah, because Aux Money does all the credit score verification and so on. But you are then the one that gives them the money and you are the one that benefits from it instead of a bank making a fortune. And yeah, so makes sense. I like being in control anyway, so if I enroll, I'll definitely want to have as much control as possible, yeah. Yeah, and it's really nice because like so you see, for example, somebody asked for €7,000, you see the credit score, you see information like, do they have credit cards, debit cards, do they own a car? They can also hand over the ownership papers of the car as collateral, for example, or as security, and yeah, their monthly income, monthly expenses and so on. Then you can see a text that they wrote about why they need the money and so on and what they explain. There are also sometimes business owners that, for example, could be, I mean, that might have backfired a little bit, but could be, for example, restaurants that only have business during summer and need a small loan to complete some kind of upgrade or renovation during winter, with the goal to pay it back already fully next summer, but with monthly installments in case it doesn't go that well, yeah. So. But yeah, so it's like you get a lot of information, and while a loan is not fully funded, so if somebody requests €10,000 but not enough people have yet given money for that loan, you can also ask questions, and the user that requested the loan can basically answer them. So if you're not sure about the information they provided, to kind of like give you more security, what do they need the loan for? Does it feel like they are financially smart enough that you can really reasonably or have a reasonable belief that they will pay back the whole thing? And yeah, and also, I mean, if people stop paying the loan, it automatically goes to incasso, so to like debt collection, and at some point the credit would be sold to a third-party company, so where you basically then, if you're lucky, you still get most of your money back, but in most cases you would lose whatever you haven't gotten yet. So it's kind of like about making a mix of like high credit score, low interest loans, and a few higher risk score loans, and yeah, like splitting your money so that the few loans that don't pan out, where you might lose your 25 or 50 euro, whatever much you decided to invest, are easily compensated by what you make from the other ones, yeah. But yeah, it's like an interesting thing that exists in Germany, so. I like it mostly because the whole concept is actually pretty nice and could help communities grow without resorting to a bank, so worth a shot. Yeah, I mean, I like it. You still have, as said, some general Bonitätsprüfung, so credit score check, yeah. But if everything is kind of like basically okay, you can write a description why you need the loan, explain your situation, provide documentation in some way, so like, okay, that proves your income and this and that and whatnot, yeah. And then other human beings decide, okay, sounds reasonable, I'm gonna, whatever, like for whatever, like your 2,000, 5,000, 50,000 loan, I'm willing to invest 25, 500, 5,000, whatever. Yeah. So, and instead of having to convince one person at the bank that giving you a loan is a good idea. So, yeah. But you also see loans like which are totally ridiculous. Like I once read one, for example, my TV broke, I need 2,000 euro. Yeah. So like basically I don't have money to pay for a TV. My TV broke, so I decided I will take a credit to buy a flat screen for 2,000 euro. Yeah. And then you already know like giving a person like that money is a bad idea. But yeah, so but overall still like I also think it's a nice idea, and I think it's also what happens a lot, I mean, in similar ways with crypto lending, you know, although with crypto lending it works differently because you have to put up some of your crypto as collateral. And if you, I don't know, would have $10,000 in Bitcoin, you could get $5,000 as a loan. Yeah. But it's also, there might be a provider in between that makes it possible, like Nexus or like Binance maybe also has like something like that. But in the end, it's like also between people, yeah. And I think if it wouldn't be so heavily regulated, that whole thing would have way more potential in terms of like giving loan like directly from one person to the other. But you need it regulated in terms of for those people that don't pay back, that you at least have some kind of automated flow that tries to go through debt collection and the court to get your money back. And yeah, it looks like we actually have our wave 3 here, so that would be 1, 2, 3, and that will likely be wave 4, might go a little bit lower, might go into on this median line as we know, might also turn around here, so which it doesn't, but yeah, and which would then go up here for wave 5, and if this would be our wave 4, and we said like 1, 2, then that would be 2, and like this, and our, not perfect, should be a little lower, but our destination channel would basically be that from, if we turn around here, we go either to here, 166, or we go to 170 roughly, so like somewhere here. And although actually if we consider the rule of alternation, if this is wave 1, 2, then this would be an easy zigzag pattern, which would require this to be a more complex correction. So more likely from here we would first have another zigzag and then some other corrective pattern, and then we would go up. So likely 170 then the next goal. Unless we go a little bit lower here, then our goal for wave 5 also gets a little bit lower, which actually might still work out because again, so 0.0 and 2, no, not that one, 1.4, so 2 and 0.4. So if 0.4 would be lower, technically it would flatten that destination channel, but since we, based on the rule of alternation, would also expect a more complex corrective pattern here, so zigzag, zigzag upwards, sideways in some way, like a flat or another zigzag, it would also mean that we still would likely end up at 170 as like the goal here for the 5th wave, which will be wave 1 of the smaller impulse that makes up this red wave 3. Yeah, so that's what we're looking at right now. Yeah, and yeah, I can close that, and yeah, we'll have to. Cool, that's finally working, but it's only getting the first message and not the chat bot. Oh no, it does. Cool. Cool. And let's check it there. So I get the base channel back here, so. CP, can you turn the volume to 11, please? Yeah, CR, yeah, no, could send the wife cooking and maybe we get to see the wave 5. But the wife decides to ignore that. Yeah, I'm finishing up. Huh? Okay, so there's the condition that only once I end the stream she will feed me. So we have a tricky choice here. But yeah, like I think we'll end the stream. Like it would be nice to stay online a little longer, but food would also be nice. Happy wife is even better. And besides that, I still have parts of the work I wasn't able to catch up with, like support tickets that are kind of like important. And yeah, like bait and switch, yeah. And yeah, I mean, we know from history, not always, but often when my wife goes cooking, the candles turn green. So obviously you all are also in favor of me turning the stream off so that the candles turn green. I think we have our current prediction, but we haven't labeled this wave 2 here properly. But yeah, like we got higher than this point here, so no matter how this would be labeled, maybe as a triangle in some way, maybe not, but stands to reason that this is a third wave move of a very small degree. And again, based on that, while we might go a little lower into the median or technically the bottom, which would be 161, 162, we could also already have the turnaround here. Rule of alternation would say we see a more complex corrective pattern here, which means we go up a little zigzag and then a little bit sideways movement with another zigzag or flat or triangle or whatever. And that might take up the rest of the day. It might already finish today, and then we would have our wave 5 move, which should then technically take us to 170. And yeah, go eat a horse, yeah. It's not about how much I eat, it's about the cooking. Yeah, apparently. So, or maybe we will have to make a long-term study and keep track of what I eat, how much I eat, and like basically, so if cooking something different has a different impact on the stock market. Yeah. So, I mean, yeah, like it's like my wife said, like she saw a study or somebody posted a study, and she was saying like in our daily skim emails. She saw a study, or they mentioned that apparently people bothered to create a study of the impact of tear gas during Black Lives Matter protests on the periods of black women. Yeah, like so we might as well fund the study. I'm gonna create a GoFundMe campaign for that. So fund the study to figure out if what my wife cooks and when she cooks it, or when I eat it, if it's still warm or already cold, if that has an impact on the stock market or not. Yeah, and obviously the study has to pay for the food, so, and for the stocks that I buy to keep track of how it works out. Yeah, and I think that sounds like a reasonable business idea, study. Yeah, and yeah, but yeah. Anyway, just gonna connect there so I can push the bye-bye button. And as always, if somebody comes up with some alternative labeling, I'm still like on this smallest degree. I'm just gonna zoom out a little bit here, 30 minutes maybe. So while our endless triangle found its end, yeah, and we are in a new impulse wave. Not sure if this is already 1, 2. So like with the labeling basically since the 4th of May. Yeah, like would be interesting if somebody comes up with something else. Or not. As always, I will schedule the streams for next week by Sunday. So around this time on Sunday, you could check the channel and see when the streams are scheduled. And yeah, and with that, and as always, you can join the Discord community. A link to that should be somewhere around. But I will also quickly just grab one. So there we have an investing channel and Elliott Wave Theory channel, where you can either discuss others' predictions, so like what I'm sharing and what others are sharing, or share your own predictions. And yeah, so so that's it. Thank you all for tuning in. As always, it's been my pleasure. And yeah, have a great weekend. Hopefully we get to see wave 5, not this reddish one, but the small one that takes us to 170 today. And yeah, then we'll have basically another drop to watch for wave 2 on Monday or so. So till then, have a great time. Bye-bye. And there we go.